Yo.
I just want to see what this looks like on your screen.
Perfect. That's exactly how it froze though.
Crap.
Is he recording?
Not yet. He will be, but
okay.
It'll be okay. Slow connection.
Reestablished.
Actually, yeah, we can always edit this if we're not using it. So if you can go ahead and go back in.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
These small caps, you ever see, you don't trade small caps with Paul. It's like I actually don't either very often. And today there was one that kept showing up on my scanner. This NEWL.
Are you recording the screen?
And so I stared at it like when it was like at $1, and I was like, well, I don't want to trade $1 stock, like, because I have all this stuff to do, and I'm like, I just don't need the stress.
Oh yeah.
And then, it popped up to $2 and it started to flag, and there's like 30 million shares in volume. It reverse split. It had a 1-to-50 reverse split. So like the float is like super compressed, And
is it, that was today?
Yeah.
Is that the one? I went in your chat room today, and I wasn't watching. I was in the kitchen. I hadn't had the volume on before, and I heard you like yelling, like screaming out something. I didn't know that's how it works. I ran back to the screen, and I thought I was going to see all this commotion. And you're just like this, yelling stuff out.
Oh yeah. I get super hyperactive, especially if it's like early. It's just how it goes. Because you never want everybody to miss the alerts either, so it's like I yell it out like 3-4 times. Because you always have the people that are like, what did you say? Because I'm going so fast. I may say, hey, I'm buying racks, but the average person might not know like what racks is. You have to say RAX.
Yeah.
But in the commotion of like just trying to get in, you just say racks and then you forget, so it's like you gotta go back. I think everybody's loading up in. Hey, Mr. Purnell, how you doing, sir? Michael Gonzalez, hello. Hey guys, how's the audio? Everything doing good? Hey Luis, how's your paper trading going? Awesome. Hey, good to see you in here, Keith. All right, cool. So let's get started, guys. Let me hit this thing on record here. And so everybody, welcome. This is a pretty big day. This is something we've all been planning for quite some time, and something that you guys have asked us for years. And what we are doing is adding a swing trading component to our basic business that we've had for all these years, which is primarily focused on day trading and education, and then we have our hedge fund. But all of these things are really centered around day trading and momentum trading. And for those of you guys that have seen me in the chat room, I am still to this day a wild man trader, day trader. And that business has been great. But over the years, what everybody's asked us for is like, what do we do if we have a job? You know, what do we do if I can't sit there and look at your face on video? Because one of the things with the day trading too that is always going to hold it back is that, you know, if you really, really want to try to mirror or get good ideas, you have to be watching me on video. But if you have a job, or even if you're around women and children, you can't have me on video because, well, frankly, right, we're listening to rap music and swearing all day. You're gonna get fired, you know. So last year,
the advantage of the swing trading service is you don't have to look at Kunal's face. So
that is true. That is true. So last year, we actually, between our 4-day class and our 60-day class, we had over 20,000 students, you know, come through one of those classes, 20,000 different students. And one of the things that always happened was people would send us feedback and say, wow, love the class. Man, I came on the chat room. I had a blast. Like, I had the best time ever. But this style of trading is very fast, and it's just not for me. Like, I have a job. I'm a pharmacist. I'm a lawyer. You know, I work in a factory. Whatever those things are, right, you're not always going to be just at your computer. And so we survey everybody, and one of the things that everybody kept asking me for was, hey, what do I do if I have a job? And for years, it was basically like, well, I mean, we don't have anything. And I actually am a really good swing trader. You know, I've always been a really good swing trader the last, 4 or 5 years. And in the commotion of day trading, it's like I always forget to call out swing trading alerts. It's just too confusing. Because, like, you call out a swing trade, and then everybody gets in it as a day trade, and then they ask you all day, like, are you going to sell it? And it's like, no, it's a swing trade. And so the two rooms didn't match, and I wasn't able to keep up with it. I just don't have the skill level or the patience to do it full time. So the last 2 years, as we've been taking all these surveys, we've been looking around for a swing trader, and, the original thought was that I would just do it myself. And I wasn't quite there. I'm a good swing trader, but, I'm definitely not the best. As my focus and attention went to something else. And so we kept looking around. And, I originally came up with one name, and it was like, I was going to ask Paul. And Paul is my mentor. And Paul at that time had just sent him an email with feeling him out. And you had just moved to California, and you had some family stuff going on. And
yeah, so I just started trading full time. That was
yeah. So I didn't want to just dig at you right there. And so I'm like, I'll just wait some time. Let me see if I have any good students or somebody that wants to do this. You never know. And so, guys, I kept running around, and I kept circling back to just the same name. I looked at this person, you look at that person. One of the things is, even the people like on Twitter that have really big followings or really have put up really good charts for swings, nobody ever calls out their plays. It's really hard to figure out if anybody has the actual skill and the methodology to be consistent. And you can tell a lot when you're looking at not how they post their charts, but also their reasoning and their thinking behind it, because you can tell a lot about the sequence of events that they might need to see before they take a trade. Their method is super, super important, and so we just couldn't find that person, and so we delayed it. And then, a little while ago, I snuck another email to Paul, and he had a little bit more free time on his hand. He's like, yes, let's talk about this. And so it's like I came back full circle. And so the last month or so, we've been really putting together some stuff to build a product for the part-time trader. Somebody that has a job, that can't sit in front of the computer all day, but they still want to trade momentum, they still want to trade trends, they still want to take explosive types of moves, those big chunky gains. They don't want to just sit there and trade IBM, or Microsoft. They still want to get into something that's moving, but they just can't day trade. And so, we've been putting this together, and Paul is the perfect guy for this. As many of you guys know, we talked about this in our boot camp. I actually came to Paul maybe 5-6 years ago when I was having a lot of struggle as a trader. One of the things that happens with new traders, and this is the time frame is lessened, but 10 years ago and even 8 years ago, there were no blogs and there were no like online video lessons, and there was none of that stuff around where if you were new, you could get educated by actually talking to somebody that knows what they're doing. You had to read books, and so you'd read like the William O'Neill books or like Stan Weinstein book, and all of those things they give you very abstract concepts, but they don't give you a methodology of like what I needed was A, do this, B, do this, C, do this. I needed a recipe of like steps I needed to see to trigger before I could take a trade. 1, 2, 3, 4, 5. So I'm really good at memorizing stuff, but I can't just come up with stuff. And so that's what was happening to me for years. It's like I was mixing and matching all this stuff that I learned in books and then trying to apply it with real money. And it was a disaster. Like 1 year I would make good money, and then the market would change a little bit, and I would lose a ton of money. Then 1 year I would make money, then I would lose money. Or it could even be 1 week I make money, and the next week I get obliterated. And so it was like this back and forth that was going on for a while. And then in like 07, really like kind of people started talking about blogs. Like blogs started, the word blog, I didn't even know about the word blog in 2005, And 2007, these blogs started to come out. And so one of the ones that I stumbled upon was Paul's. He had a blog called Market Speculator Blogspot. And I was looking at his charts and the way he was thinking through, and he had a very simple methodology. At first glance, he said, wow, you go to a lot of the blogs and somebody has like 1,000 indicators. You ever see people post the charts on Twitter? You almost can't even read the price pattern because they have so many indicators. It's like, well, the ADX does this, and then the RSI crosses this, and then this does this, and this does that. It's like all of it, and it was very simple. He focused on price pattern, and then his indicators. It looked like to me he wasn't using them to take signals up to buy or sell, but to confirm essentially the price action that he was seeing. And so his charts were very clean. There was a couple indicators, and then you were really focused in on what the chart was doing. So,
and when I saw you, I could see myself coming up in that. I think all of us go through the same thing where we get into it, we read all these books, and back then and even now, most of the books, most of the analysis you see, it's about stock picking. It's about a setup. It's not really about how to trade it. I mean, there are a ton of good stock pickers and tons of people who can find setups, but how do you really trade it? And people wonder, well, I'm trading these setups and I'm still not making a lot of money. Why is that? It's because most of the services out there, most of the books that I read, they don't go through actually how to trade, how to manage your risk. Once you get into the trade, how to manage that trade, probabilities versus risk.
We just did a class, and I copied that from you. I did risk management class, and we just had one on Thursday for one of our classes. And the first sentence is, there's a big difference between being a stock picker and a trader.
All right. All right.
And I copied it word for word, like what you told me all those years ago. And so, guys, what was happening is I was having trouble. I was innately actually a really good stock picker. I had a good eye for picking momentum.
Yeah.
And then what would happen is I'd buy it. Something could be up 20%, but I wouldn't know what to do with it after. I didn't have any rules, which is essentially what a lot of trading is. So that stock would come back, or I'd double down. So that was always a mess. So my results were inconsistent. So I came to Paul, and I was making comments on his blog, and I sent him an email asking for some help. And he said, yeah, I'll coach you. And it wasn't like he had to sit there for 6 months and coach me. Literally from the first chat, I started to realize things like, wow, I've been just picking stocks the whole time. I didn't really know anything about trading, a rule-based system that I could lean on when there's all this randomness and variable. And that's what really started to turn around my trading.
I remember that, and I remember you had a lot of indicators. With you send me some charts with a ton of indicators, and I've been that exact same thing because we all read the Murphy book, we all read the books on candlesticking, and they don't really explain they explain what they do, but how to incorporate it into your trading. And I think you must have had two different RSIs, two different stochastics, a Bollinger Band, an envelope, all that stuff. And we went over how this is just to confirm what you see. We're really looking at price and volume. And these indicators, and we want to see it with our eyes. We want to see the price patterns with our eyes. We want to see the volume moving with our eyes. The indicators are just used to confirm what we're seeing there. We're not trading based off those indicators.
I was looking for a Holy Grail. I was looking for the Holy Grail.
And the Holy Grail is what you talked about: risk management, trade management, simplicity. That is the Holy Grail, not the actual stock picking.
I was just a hot mess. I had read too many books. Stan Weinstein uses this one indicator, then William O'Neill uses this.
Another one.
And so I'm just trying to combine it all and come up with something that works because nothing works.
In the beginning, I studied Cancelam very closely, and you start to realize they post all these charts of all these stocks that have moved over the last 20 years. What they don't post is the stocks that were in kind of those same setups and didn't move. So you wonder when you get into the stock, why didn't yours do that? Or
Cancelam is a very tricky thing. It's a lot of it still holds true. I notice, a lot of it still holds true. But the markets change, and so they haven't necessarily updated their method to adapt to new conditions.
It doesn't always apply to different markets. You've got to be in the right market for that to work.
You need to be in a bull market.
Yeah, exactly.
Otherwise, it's done. So, like I was saying, guys, Paul, he taught me, and it was literally probably after we had been done working. It was like 6 months later I launched Bulls on Wall Street. Like, it was like...
I didn't even know about it. I just found out about it now. I never knew.
Yeah. It took about 6 months. Like, I was, sitting around, and I was doing a lot of the swing trades, and I was like, wow, I'm really good at this. I started posting all my trades on Twitter, and I'm like, huh, cool. And so I launched Bulls on Wall Street, and as Bulls on Wall Street started, because I had the chat room, I started, getting antsy, because, when you're a full-time trader, it's like, you're just sitting there, so now you got 200 people are sitting there, and so I just started day trading. I didn't know how to day trade. I just started doing it. Like, I'm like, oh, let me just open up a 5-minute chart and do the same stuff I learned. And some of it applied, some of it didn't, but, I started to kind of figure it out. And so then I got away from the swing trading because my life was just there in front of a computer, and so it's like things changed. So
do you still swing trade? Do you still have some?
I do. So, I have my IRAs and stuff like that. So those I'm strictly doing the swing trade. And actually, it was funny because I was talking to Jordan about it. We've been going through your stuff and kind of putting together your material. And Jordan's like, Kunal, you taught it to me wrong.
What was really interesting last week when we were emailing back and forth about GMCR, and you're looking at it on a different time frame than I am, but actually the concepts were so similar. It was basically the same thing. You got a different entry point based on, I think it was the 30-minute charts you were using, whereas I was looking for the gap fill. But yeah, a lot of those concepts apply to day trading, swing trading, whatever you're doing.
That type of chart is really tricky too, because it's like, guys, if you see it, GMC. We were talking about this GMCR stock, and so one of the setups that I had actually learned from Paul, one of the first setups was it's called a breakout pullback play, and the essence of the breakout pullback play that he taught me was that a lot of times these things break out, and then if they hold the bottom of the breakout bar and then start to develop, as long as you're closer to the bottom half, you can actually take a position with the stop under and then play it for essentially a swing for a breakout, a PR breakout swing setup. But in this particular case, because the stock had already been up for 6-7 days, it had multiple different levels of support. And so I was eyeballing this particular one, thinking that the bottom of the breakout bar wasn't enough of a pullback, because it had pretty heavy resistance. And usually you need 3 kind of tests, like a test to really get a key breakout. So I was thinking it would come back to here, so I kind of rejiggered the setup a little bit. And so it was interesting of how everything develops. I was looking at the 30-minute chart. He was looking at the daily. And, we still kind of came up with almost the same conclusion of where the reward to risk ratios were, but sometimes.
I think for you on that smaller time frame, you could get in at 112, 113. For me, I was looking at the bottom of the gap fill because there was that underlying support with the moving average.
Yep.
And if it went to there, it was going to screw up my stop and my risk ratio would get messed up. So I actually never took that trade. And are you still in it, or did you probably pulled
out? No, I sold it at like 116.
See, I'd be in and then I'm waiting for it to get to 118, 120.
Yep, and so your RRs are going to be different than mine. But for me now these days, if I held a stock for $10, it would be like it's basically because I went on vacation. I just don't have the patience. So if Paul's talking about a little bit different, he likes to use moving average. He wants to see a deeper pullback so that he gets a better reward to risk ratio because he's going for a much more extended gain where I'm more of like if I make $3-4 and I risk $1, it turns out to be a really, really good RR. So, guys, Paul, can you give us a little bit about your background, like how you got into this, how long you've been doing this, how you kind of came up with this method that you're using?
Well, I think like a lot of people, early on in high school, I was really into stocks, didn't know what I was doing, buying names. Like this was back in the early 90s, PG&E, studying earnings and all that kind of stuff. And I would wonder, like, why am I not making any money? This is a good company. And it took me a while to figure out that none of that matters. All that matters is money flow. Where are the big guys putting their money? So when I kind of stopped once I realized, to me, it felt like everything was rigged. And so I stopped trading. I got back into it in law school. I started reading some books. And then it started to kind of click for me once I started making some of these trades. To see, once I learned price, volume, I started out like same way you were, where you're reading all these books and everything was just all these indicators. But as you start to trade, you figure stuff out. You realize this doesn't work, that doesn't work. A simpler method worked. So just from there, I just kept learning. Some of my friends started asking me for tips when they saw how much money I was gaining. I started that blog up with no intention of creating a trading service or making any money or anything like that. It was just for my friends. And one day someone told me, hey, it was listed on Google Finance or Yahoo Finance, and pretty soon it just kind of blew up from there.
That's sweet.
And I learned to trade part-time. With my job, I had a full-time job. I started that account with $5,000. Never put anything in it, never took anything out. Luckily, it never blew up. It's been okay. I had some blow-ups earlier, but from there, it never blew up. I'm trading off that now. So I did the part-time method. I've been going at it for 4 or 5 years, and built it up to the point now where I can trade full-time.
Sweet. And you were a lawyer, so you were making money.
Oh yeah, I was, but I wasn't happy.
Sure.
Now I'm trading full time. It's my passion. It's what I love to do. Get to be at home. It's great.
Are you still a Minnesota Timberwolves fan?
I am. And I'm very disappointed that Kevin Love wants to leave.
So he's like, that's the best player they're gonna get for a long time.
But I grew up a Golden State Warriors fan. I grew up in the Bay Area, so I'm happy that he wants to go to the Warriors. So we'll see what happens.
That's true. He's got some spots. When you put him on the Chicago Bulls or something, you've got yourself a good team. The Warriors, they're all checkers anyways. So who knows if that makes him that much better. He's good though.
Yeah.
What's up with Rubio though? He can't even shoot. You would think that they would get him a shooting coach and be like, go to Spain with this guy, and you're going to shoot 1,000 times a day.
The thing about him is, even if he can't shoot, just watching him play, it's just, you get 2 or 3 moments every game.
Yep.
Every time you watch him.
It's just, you can't be a great team if, you're playing 4-on-5.
That's true.
Cool. So, lawyer, now you're trading full-time. So, guys, for this type of method, Paul made this while he had a very intensive job as a lawyer. When he was coaching me, he was still practicing law, and so we were always working these crazy weird hours because he full-time job.
I remember. Yeah, I used to have to give my students like crazy hours, and a lot of them would say, "Okay, I'll be there at this time," and they couldn't do it. One time
midnight.
I told you.
Midnight,
One time I think I told you the only time I could do it was like 4:45 in the morning, and I almost didn't show up because no one ever shows up when I do that. And at 4:50 I showed up, and you were sitting there in the chat room. I was like, "Oh, hey."
Yeah, I was so excited.
You were dedicated.
Well, you know what happens once you learn a little bit and you actually apply it and you can see it work. It's like a drug, right? You have to have more. Like you gotta finish it off. That's how I am. It's like I got one tip, and it was like that first day you were talking about your charting setup, right? And so it's like you first said price is the number one. I use this in my class today. Price is the most important thing, and price shows you if there's a trend, if there's a pattern. Price is the only thing that pays. The number two, second most indicator that is the most important is volume, right? And volume tells the whole story of this and that. And then everything else, your stochastics, your moving averages, your Bollinger Bands, these are all used to confirm probability of what you see from price and volume. And so that makes so much sense because it's like, I was looking at all these indicators and you're like, it's oversold, I gotta buy. And I was doing this thing with oil. It was just stochastics on oil just got oversold. I just buy some. And I was never able to time it right because, of course, using stochastics alone, it gets you in the ball game, but, you still could fall for 2, 3 more days. You know what I mean?
Yeah, that happened a lot where you'd ask me, this is oversold here. Should we get in here? And I'd say, just wait it out a few more days. And there was nothing I could tell you in terms of a clear signal. It's just something you kind of feel where you're at the oversold level and you're just going to need a little more. Sometimes it's just experience. You need to feel it out.
So, guys, what I want to do is we're going to go over some charts and how Paul actually looks at the charts, and then what we'll do from there is we can talk about the basics of our program and stuff like that. So, Paul, what I want you guys, if you don't mind, is kind of work everybody through like your process of like what you're seeing on these charts, like when you're charting it, and like what all this different stuff means.
Okay.
One of the cool things I learned from you was like, for years I used RSI as like an oversold, overbought indicator. I bet everybody does. And when you told me to spot divergence, that changed a lot of how I buy breakouts. When I was swinging, because it was like, I was able to spot divergences to figure out if there was a higher probability the breakout would fail. So it's like some cool stuff.
Yeah, so what I do here, what I have on most of my charts is I have the stochastic. Basically, that's what I use as my overbought and oversold indicator. RSI, I basically use it for divergences or confirmation of a trend. I don't use it as an oversold, overbought indicator. So here, what I was seeing is a lot of people saw this kind of mini breakout right into resistance, and on Twitter, online, I just kept hearing people talking about, oh, we're getting a new high, SPY is going to break out. What I saw was a divergence here in the RSI, where if you look at that first high that it had made in March, RSI was near 70, and we're actually higher than that point, and RSI is lower. So right there, you see that there's something to be concerned about in terms of a breakout. So at this point, I'm just watching it to see what's going to happen. But I'm looking for two things. One, if it's going to break down here. Two, if it does break out on low volume, I'm expecting a failed breakout. And so that was what I saw on this chart here. Also the volume pattern. The second thing I look at is volume. And volume was not confirming anything telling me that there would be a breakout here, because the red, which is showing downside volume, was much higher than the upside volume.
So, Paul, can you go over, like, a lot of people probably don't understand what actually a divergence means in terms of how it relates to price.
Okay, well, when you have a high, you want to see the RSI also making a high. And here we did not see that. We back in March here. Can you guys see my pointer, or is that on?
Yep.
Okay, so RSI was right around 70 here. So when it reached this high over here, you want to see RSI above 70 or at least at 70. And what we saw here was RSI was lower than 70, so it wasn't making a new high. So that creates a divergence. That doesn't necessarily mean you're not going to have a breakout, but it's cause for concern. When you add to the fact that volume was not good, it was showing distribution here. That gave me a signal that it's going to be time to short. So I was watching it on this day, and I think we had it in the first sample report here. And then you want to push to the next slide?
Yep.
Can you move it over to the next slide?
Oh yeah. The one with the doji?
Yeah, there we go. So the very next day, doji formed, which is a candlestick pattern here, right at that resistance level, and that was a signal that buyers were not coming in. And there's a pattern called the evening doji star pattern, where if price the next day prints a candle similar to that first day, but on the downside, it's a bearish setup, and you want to look to go short. A lot of people will enter on that, wait for confirmation and enter on that next day. For me, if we manage risk properly, we can anticipate it and get in on this day, which is what we did in the report. And then the following day, if you go to the next chart here, can you pull up the next chart?
Yep, it just takes a second to load.
Oh, okay. The next day we got that pattern there. So there was an evening doji star pattern, and that was pretty, I mean, Bukowski, who writes a book on candlestick patterns and done all this research, says 71% of the time this pattern works, which is a great probability for us. But this was a signal that we're going to go to the downside. And then the following day, if you can pull up the next chart.
So, quick question. So,
yeah.
Does the stochastics being above 80, does that add probability to your short?
I did add to it, yeah. So we've got the divergence, we've got this pattern forming here, and we've got this oversold stochastic, very oversold at 83. Usually 70 is the number people look at. So, and it's starting to it looks like it's about to cross over. So this was a textbook perfect setup. And we were short up here right around 190.
Nice. So guys, just like a lawyer, right? A lawyer, you're always building a case. You need evidence to compile to turn something in your favor. A trade is the same way. All trades, in essence, are 50-50 probabilities. You can win or lose, right? Buy, sell, stocks go up, down. It's a coin flip. And so once you add in your price pattern and your volume, right, all of a sudden you are bringing your probability from something from 50-50 to something better. And then you're building your case. So you have your divergence, you have your stochastics, you have your moving averages and resistance points, all these things starting to line up in a certain way. So now what you're doing is, like he was saying, it's a 71% probability. So you add in these things bit by bit, and you build yourself a case so that you can take a trade. Because if you can't do that, then everything is just a coin flip. And the more things that you can get in your favor, the more probability you add. It doesn't mean that anytime you take a trade, you've got this 100% shot you're going to win. But all of a sudden, if you can push enough 50-50 trades to 70-30s, and you repeat that 20 times, 30 times, 40 times, yeah, you may not win once, you may not win twice, but you know that if you do it enough times over the course of 20, 30 trades, all of a sudden the numbers are going to work in your favor. And so that's what you guys are doing, right? You guys are lawyers. You're building a case. You're out to take something from that 50-50 shot and slowly turn it into your favor with all these different things that we're looking at.
And not only the probability here, if you add probability to your risk, where we entered at 190, we've got to stop at 191, and our target here, I think the initial target was at 187, so you're risking $1 to make $3 or $4. So not only do you have that risk ratio in your favor, you have that probability favor with a setup like this. So that really, basically, with that risk setup, you could be right, 35, 40% of the time on the probability and make a lot of money. But with this setup here, we had a 70% chance. So it really puts things in your favor.
So, guys, some of the best traders I've ever met in my life that are like multimillionaires, they have 50% win ratios, and they still have made so much money because their reward to risk ratios are such that when they hit a game, they are making $3 to $4, and when they lose, right, you're losing $1. And so what happens is, even if you lose once, that's $1. If you lose twice, that's $2. You win the third time and you make $4. You've made $4 versus $2, even though your win ratio is really low. Now, for what we do, we take high probability trades, and we also take high reward versus risk trades, right? So you're creating a perfect storm of high probability and low risk.
Exactly. And then if you can push it to the next slide here.
Pop up and hot.
And then we got that move down here. So that was basically our initial target here, and we hit that. I mentioned at that time, now that we've got this target, there's a good chance of a bounce at this 50-day moving average. So I actually went on a different time frame, closer to years, and made a long trade while I was holding my short trade on the other setup. But if we're just looking at the swing trade here, we got the initial target, we take some off the table, and we move our stop to our entry level. So now it's basically a free trade. So we've made our money, and we can only make more now, basically. And this looks like a buy zone here. There's a lot of support in here with people that were buying in here. So our next target is going to be in this range here. And we keep the trade on until either our stop is hit or that target is hit.
Sweet. Do you ever, this is a quick question on my end. So
Yeah.
I know you've been trading the SPY for, do you ever use like these leveraged ETFs?
I do. Yeah, SSO, SDS. If there's a trade, actually I did that on this trade. I didn't mention it in the report, but I'll look at the SPY is what I use, because sometimes when you go to SSO or SDS, the moving average isn't at the right place because they're basing it on the leverage. So I use the SPY chart to trade it, and then once I want to enter, I'll enter with SSO or SDS.
Use them as a vehicle. Yeah, because you can't really look at their charts because they get split. And there's lag and price decay. And I've got some guys, I get an email at least once a week from somebody who's like, I've been holding this FAZ for 6 months. Like, what do I do? And it's like, well, actually, it's going to go to zero no matter what happens to the financials over time. It's only supposed to mimic it for a day.
Yeah,
you have a 3x.
You want to hold them for a short period of time. Yeah.
So 3x ETFs, guys, you can't hold them for months. Because over time they always all go down. There's a big time decay on them due to the use of leverage to get the 3x or 2x that's on there. Unless the market's just crashing, and those things are just sweet. So let's move to the next chart. So this is something that Paul's looking at. This is a chart on Netflix, which is this is a different type of pattern. This is not a pattern I actually trade a lot because you gotta your eyes have to be really in tune to spot the pattern.
I think it's easier to see with the W drawn in here. It's a little hard.
Yep.
It looks a lot more choppy when it's not drawn in. But basically, you could see a bottoming pattern here. And the thing that really interested me here, and Netflix is one of those stocks, even if it's not on my watch list, I watch. But you could see this time, before we were looking at a negative divergence with SPY, this is a positive divergence where we had this range here and we had a lower bottom. Price was hitting lows here, and RSI was moving up. So we've got a positive divergence and a bottoming pattern. So that's a signal that the stock could be ready to turn up. And then we've got a great volume pattern here within this bottoming pattern with price bars, positive price bars high, downside price bars lower than the positive price bars, and we had a stochastic that was turning here. So these are all, and we've got 4 signals here telling us that the stock is going to move up. I was looking for a pullback here, which if we go to the next chart, has not happened.
It's always such an explosive stock. Well, even a stock like this, the float is so low, even though it's a big name stock. So it's like they can really move. It can move just like a small cap.
Like it did today. So it did move up. We were hoping for a pullback. It's moved up here. We haven't actually traded it, but it's one that we keep watching. It's gone up over the 50-day moving average here. The volume pattern's still okay, even though we would have liked to see more volume here. It's oversold, so we won't overbought, so we're not going to enter it here. But it's one. This is an example of what we're looking for, and basically we're like predators, just sitting there, waiting, ready to pounce. And when this stock pulls back, if it were to pull back in this range here around the 200-day moving average, we'd enter. Or if it built a base above the 50-day moving average.
Hey, Paul, how important is the volume pattern for what you're doing? So I know there's accumulation, distribution. If the volume pattern is just flat, like you don't really see accumulation or distribution, does that take it off your list, or that just kind of makes it a more neutral, at least in terms of adding probability?
It usually takes it off my list. Most of my scans have something in there looking for volume. So if it doesn't have a good volume pattern, I'm not looking at it.
Gotcha. So the accumulation is key. So guys, right, that's really important. Your buy days or up days are essentially considerably larger than your down days.
Exactly.
Right. So now something like this, because it's overbought, also, I mean, you can't chase this thing up anyways after this candle, but
and that's the tough thing for a lot of people is overbought, and there are times where it's just going to keep going, and if you're not in it, it's really hard to enter. So patience is really key with a lot of these trades, because if you do enter, actually here you could, if you wanted to manage your risk and put a stock under the 50-day moving average, you can do that, but you're going to get stopped out so many times that it's really a tough trade to take.
Do you think it's harder to be patient as a trader when you're day trading or swing trading? I'll tell you what really, really helped my trading was actually trading the way you do, because originally the way you taught me was not really breakouts. You breakout, pullback, pop and pullback, break over MA, and then pull back to the MA. So it's always breakout, pullback. So that taught me a lot, because where I lost all my money, and I'm talking like blew up 4 or 5 accounts in a row, where I lost all my money was the actual day trade. Because, the commissions and the over trading, and it's like just in, out, in, out, in, out. You can make, as a day trader, 50 trades and not even know it, because you're just so focused in, and you're watching every dollar and so on. And because I had a job, and the way you taught me pullbacks, it actually made me a lot more patient for my day trading, because these setups, I knew I had to wait for the pullback. That was the method you taught me, is not to chase the breakout, especially because a lot of times, especially if you have a divergence, or a lot of times breakouts are overbought and they have divergences. So if you chase it and buy that breakout's going to fail. But often that breakout can fail and come back to a better place, and all of a sudden your indicators work out better. The divergence is gone. The volume pattern gets better, and then it's a lot better entry. So
there's 2 ways to do it. One is to wait for the pullback. 2 is to anticipate trades. When you're watching something, you continually watch a stock or an index, is to get in before the breakout. And a lot of people don't like to do that because they fail a lot. But if you manage your risk, you can take small losses and it's okay. That's what we did with that SPY trade. I got in before the pattern that evening star pattern actually emerged. So I had a stop of $1. If I got stopped out, no big deal. I lost a little money. But as long as you've got 3-to-1 risk, 4-to-1 risk, you can lose out on a lot of those small trades. And when you hit big, it'll more than make up for it. So it's either anticipate the breakout or when it does break out, wait for the pullback. If you're chasing the breakouts, in the long run, you're going to lose a lot of money.
And that's huge because everybody wants to buy like highs or like high of day or high of market or high of year. And it's like, but if you knew 5% lower that this was going to happen, why not just get it 5% lower and manage your risk?
Yeah.
You know, if you have a high probability, if you have a 70% chance a breakout's going to happen, you know, and it's 10% lower, why not?
No, and sometimes you don't need, if you manage risk right, you don't even need that high probability. You can have a 40, 50% probability rate and still make money if you've got 3-to-1, 4-to-1 risk.
Sure, because that adds up, right? You take 1,000 trades over the course of a year, 400 make $300 each, and 600 you lose $100. You know, you made a ton of money.
You know what I've always said is, we love small losses. We don't like small gains, and that's the problem with a lot of people. They take these small gains and they don't manage their risk right, and you wonder, well, I have a 60% win rate. Why am I losing money? That's why. You're a good stock picker, but you're not managing the trade properly.
Terrible trader, good stock picker. I'm actually seeing that a lot in my hedge fund because we have 200 traders, and so I run we run statistical analysis on every trade, every batch of trades, every month, and so you start to see even with traders that have been trained, and it takes a little bit of time and guidance, is that every time they see green, 10 cents, 20 cents, they sell. And because they say, because the saying is, you can't lose by taking profits, right? Or,
Plus, it's also the way our brains are wired because, back in the day when we were hunting and gathering, you saw a little bit of food, you just took it, and it's kind of the same thing. Our brains are still wired to do that. You see that small gain and you take it because of the fear of losing it. And you really have to train yourself to stick to your stops, stick to your target. And sometimes you have to wait a little bit. That's okay. Just wait. Research. Work on your watch list. Do something else, but try to forget about that trade.
That's what I always tell the guys. Like when the market's tanking or something, it's like for the swing traders, it's like don't even worry about trading because you're gonna get your moment. What you want to be doing is building the best watch list possible. So that when that moment comes and you get that market bounce, you're not scrambling for stocks. A lot of people, they know the market's about to bounce and they don't prepare for it. So when it starts to happen, they scramble.
That's when you
and they'll just buy. I'll buy anything rather than sitting around, even if it's for 2 weeks. If you get the prime opportune moment, you can have 2 stocks, 3 stocks, whatever, and if they're perfectly aligned, with your probabilities and risk and stuff, I mean, you can load the boat and have a really, really awesome year in a matter of, that 1 month, if you really are patient. That's huge. That's huge. Making sure you're ready for it. So let's talk about this stock, GDP.
Okay, GDP, that was in the trade report last week also. It's going to take a minute for here to pull up, but it was a breakout. Here we go. It was a breakout. There was a pullback. We had this trend line drawn here, and we were waiting for a little break of that trend line there. And what we saw here was a really good volume pattern. The stochastic was oversold and turning up, which is a good signal. So we were looking to enter here. You probably could enter up here, but I wanted to wait for a pullback, so I think we entered around 2350. So here's a good example of a great risk ratio. So you enter here around 2350, you place your stop under this low here. I think we put it at 2250, so we're risking $1 to make, and our target was around 26, 27 where the high was. So we're getting 4-to-1, 5-to-1 risk ratio here. So basically, if this trade fails 35, 40% of the time, you're still going to make a ton of money with that risk ratio. And we also had moving average. This is one of those anticipatory things where a lot of people trade the moving average cross. So if we get in before that, the guys who see it once the cross happens are going to jump into that stock, and then you can get a really big bounce. And then if we go to the next slide.
Let me ask you this, just on something like GDP. So, like in this particular market, there is not that much new leadership, right? Because all the momentum stocks have been shot down. The SPLK, WD, all these type of stocks. And oil and gas has only been the only hot sector around. Do you take into account the sector strength at all, or it's just a straight on the chart? It doesn't matter what.
Yeah, I do actually. I use it when I'm scanning. I use a top-down approach. So the first thing I'm doing is I'm looking at the market by the cues, and then I look at which sectors the money's flowing into. And there's a section in the report that focuses on the ETFs and which ETFs have good money flow. And from there, I start to pick up on stocks within those sectors. And this is one of them. The reason this made my scan was because it was in that energy space.
Sure. So, guys, if you don't know, like, this is his report. So, in the report, he's got all the stocks that he's watching. And then at the bottom, he often puts, like, the sectors and ETFs and things that are going down. He's running different scans to see, essentially, where the money's go. That's the easiest way to put it. It's like he said, where's the money go? And so oil is, frankly, it's like one of the only 2 or 3 really strong sectors left. It's like, even though this market's near highs, it's like technology, everything's been really sold off. There's not much leadership in anything except oil and gas stock, which are like the crappiest day traders and like great swing traders.
Oil stocks have not been good for day traders?
Not really. You know what? They've been great. I swing them a lot because I noticed that oil and other commodities, they work really well with indicators in general. Like if you have a good price pattern and like stochastics and stuff like that, they actually react really well to them. But because like oil, gold, silver, they trade all around the world, they're often really gappy. So, like, your day trades often, like, the move might be in the gap, you never know. And so it's just, it screws up your day trades a little bit. And also the range. A lot of times on the range, you might not get the intraday range that you need. To have a really good day trader stock, it's like, you might need a 5, 6, 7% range, which you don't always get in, commodity stocks.
Yeah,
they might move in the gap.
They've been working great lately for swing trades, and here we entered in the report close to this support line here, and it did exactly what we wanted. It bounced here. It's close to our first target. The moving averages look like they're about to cross now, and that's what we're waiting for. If these moving averages cross here, you can get all those guys that look for the crossing patterns to start putting money in, and then we should hit our target, take half off the table, and then let the rest ride and see how high it'll go.
So what happens? Say it gets to 28 or 29. Do you start trailing up your stop, or do you leave it till the second target's hit?
I will start trailing it if it goes high enough, and I start looking for other areas of support. Here we don't have any. I don't know if we pull the chart back where there's any support, but we're always looking for support lines, resistance lines. So if back here around 29 there was a high, might start to get concerned and move our stop up.
Okay. Because, you don't want to sell it prematurely either. That's the problem that 99, like when we're doing the analysis of our hedge fund, it's like all these guys we do, when we do the
take
analysis,
themselves out of trades. Yeah.
All these guys at one point were, that day, every single one, like 95 to 96% of them, were in a stock that just went bonkers on a day trade basis or whatever. It went up 10% or 11% or 12% or 5%, but none of them held it for more than, the guys that actually lost that day, none of them held it for more than 10 cents or 20 cents, and it goes up $4, $5, $6. It's like,
yeah, it's the same thing with swing trades on a different time frame using different amounts. We're not looking at 30 cents, but yeah, once you hit that target, you want to. The best trade is where you can get that free ride trade, where you've made your money, you set your stop, and if it pulls back and you say to yourself, I should have taken it all out at that time, just remember there are going to be times where the stock explodes and you'll still be in it.
So I still do that to this day. I sell half.
We all do.
Yeah, I sell half and put the stop in my buy price. And every day there's some smart aleck. We have the in the chat room. It's like, today you would have made $3,000 if you just sold all your stocks full position. And it's like, yeah, but what you don't realize is tomorrow I might make $8,000 riding up the last half or 1/3 position for 20-30%. Where today, yeah, I may have taken 50 cents of a position off, and taken the whole game. Oh my gosh. And, that same stock goes up $6, $7, $8 the next day. And the same scenario. You can't help sometimes when it's going to be the home run or not. You can just be positioned into it. And when you see it, you've got to let it roll.
Anytime you can get that free trade, that's what we're looking for.
So I find actually a lot of my returns come from the free ride of those handful of stocks every week that go just above and beyond what you really originally planned for their first target. And that carries your week. When you have you have your good weeks and then those amazing weeks is when that free ride really takes over.
In day trading it carries your week, and swing trading it can carry your month, it can carry, the quarter. So it's really important to do that when you find that setup.
So I think that's what really holds people's results back. And I tell the guys in my chat room, if every single week at some point you're not in a stock that had a 10% type of gain on your free ride shares, your week is probably just going to be, average to below average. It's like when you look at your results, if you don't have that type of gain somewhere, and it could be, for day trade, it could be 5%, 6% or whatever, but if you don't have that type of elongated gain a couple times, a week or a couple times a month, your results are just going to be small because those home run trades, they're out there. People get into them actually, and it's when you're in it, you have a responsibility to ride it.
Yes.
Cool. So let me ask you just a couple questions. So for something like this GDP, how would you, say you're somebody and you have whatever a $30,000 account, just throw out a number. How would you size something like this?
A lot of people get focused on diversification. You want to spread out your money. I don't do that. I could have one position and I could use the whole 30,000, or I could even go on margin and use more than that, just by managing risk properly. Because people have a tendency to look at the total amount you're investing in a trade rather than what you're actually risking. So here, if you enter and you have $1, your stop's going to be put at, where you lose $1, and you've got 500 shares or 1,000 shares. You're not risking that whole 30,000. You're only risking 500 or 1,000. So depending on the setup, what the market is, I wouldn't have a problem just having 1 or 2 big positions. That's actually how I trade. I usually don't have more than 4 or 5 positions at a time.
Okay. So, that's basically the same thing with me. I have all-in trades because all-in doesn't actually mean your whole account's at risk.
Exactly.
For me, a lot of times, depending on how much my total risk I do in a trade is not static. Like if I have certain setups that I have stats on that I'm just really good at. So it's like my normal trade I risk $400 on, but I have other setups that I do really well. So I may risk $1,000 on that trade because I have stats that say I win on this trade 70% of the time. With good RR. So I actually, I triple up, essentially the risk on it because I know I handle that trade well. So you might have the whole account and margin in it, but you're still really only risking $1,000, right? That's your setup. So you can be all in and still be low risk. And you could be all in and even be at $200 risk or $300 risk or $100 risk. Because risk is relation to how much you can lose on that trade, not how much your account is in.
And that's actually the great thing for smaller accounts, and it's how I built up my smaller account. Whose call is this? knowing how to manage risk, knowing that if you've only got $5,000, how to place your stops where you're only risking $200, $300, $400 at a time, and building it up from there with bigger winners than what you're losing.
So, guys, if you have a $3,000, $4,000, $5,000 account, then this type of method will work out really well for you. And the reason why is because, number one, you're not going to get hit with some pattern day trade rule type stuff because you're swing trade. But you're also still trading stocks that can be explosive, right? That are moving up multiple dollars in multiple days. And so, right, even if you have 300 shares of something like a GDP and it bounces up $4, well, guess what? That's not a huge investment, and you're making $1,200 on it, right? And so you have the opportunity to get bigger gains by still taking small risk, and you can do this with a small account because you have access to either margin, but you also have access to these explosive type of stocks that are trending. For the most part, do you trade mostly stocks that are trending or moving up in some manner, or do you ever go bottom fishing? I know your first trade, the first setup you ever taught me is a rubber band setup.
The rubber band
setup. All I was focused on for so long.
Yeah, it depends on the market. If there's a trend, that's what I'm doing. I'm looking for trending stocks. If the market is falling, I'm looking for those rubber band setups. Or even if it's trending, going against it. I do a lot of counter trend trading. So if the market is going down, what usually happens is it starts to go down, and everyone's afraid to get in. And then people start watching. Oh no, it's going down. I'm going to miss out. When the average trader finally gets into that trade, that's usually when it's time. When it's that rubber band, it's stretched so far, it's going to bounce back up. So that's what the psychology behind that rubber band setup, and I do a lot of that type of trading.
Sweet. And actually, from what you taught me in the rubber bands, I was so obsessed with it for a while. That was like all I was doing. Because it's like that psychology of like you're getting something cheap. Yeah. And I turned it around though. So like a couple years ago, I started really getting into shorting, and the shorting rubber band setups is like it's so fun. Like,
it's scary. It's scary, but and when you feel that fear, that's the time to do it because that's when it's gonna snap back another way.
It's really, really hard because psychologically you're getting in a stock that is flying, and it might start making some lower highs, and kind of you start to see something forming where you may crack, but it's like stock goes from $2 to $10. It's like when you short it,
it's scary, but
it's scary because there's so much momentum and volume. There's so much volume, right? And so you're like, oh my god. We had that a couple months ago. These battery stocks like Plug. I don't know. You don't usually trade these small ones.
No.
The stock Plug went from like $1 to $10, and at $10 it was trading like 100 million shares a day. So it's like this is a piece of crap stock that's doing a lot of money volume, and it's like it actually took me 3 different tries, but I only lost 10 to 15 cents on all those tries. Just like you told me, like you do it on a rubber band trade.
Embrace those small losses. Just that's fine. You may have lost small on those losses, but that one where you hit, it's going to hit big.
So I did exactly just like you told me. So I remember when you were teaching me, you're like, man, this setup is very high reward, low risk when you time it right, but your probabilities may mess you up mentally because you're not going to win 70% of the time on this trade. You're going to win 35% of the time. But when you get it, it's right. And so it's like I tried it 3 different times. I lost 10 cents, 10 cents, 15 cents, and then boom, the day it cracked, from $9 down to $5 or $4, like just, when everybody sells, it's a cascading thing.
Yeah.
And it was like 1 for 4, but it's like, $4.
Win rate doesn't matter.
Win rate doesn't matter. The risk ratio is still 10 to 1, even after all those losses. It's like, it's so fun. So that's been like kind of my new thing. It's like shorting, and it's way more fun for small cap stocks. And you see a lot of stocks that go from like $2 to $8 to $10. And as long as you can get the borrows, it's like those things are always going to crack. They're
even in the swing trading, especially in the momentum stocks or the market leading or the stocks everybody's watching like Apple, Netflix, that rubber band setup works great.
Those stocks do tend to get extended too. They do tend to run up for 4 or 5 days in a row, and then have very vicious snapbacks because there's a lot of people in them and they're still high beta. Yes. I mean, you see all these things: TripAdvisor, Netflix, Tesla. They're all low float stocks, so they move at such exaggerated moves. Like even a Tesla is like a 70, 80 million share float. And you're talking about a stock that can make monster moves. They get extended.
Exactly. And that is what's in my scan: low float, high short interest, all that stuff.
Awesome. So let me ask you this: in terms of you mentioned this before, how many stocks do you typically have going at once? Usually I notice you play an index. You have one index play.
I position size pretty big and manage my risk, so I generally don't go more than 4 or 5 positions. And you don't need to. What happens with a lot of people, they think they're diversifying, and what they're really doing is just buying 3 or 4 of the same setup. And they think they're diversifying. So why do that? Just manage your risk, and I take bigger positions as long as the risk is managed properly.
So yeah, that's huge. I actually the same thing happens to me in day trading. I actually we ran some stats on my trades, and anytime I have more than 3 positions at a time, my results just tank.
Oh yeah.
Like I didn't even notice the trend for a while. I just noticed that I was feeling really like, why am I doing all this?
And what you're doing is you're taking lower quality setups just because you think you need to diversify.
Yeah, because it's like I gotta hit one winner out of these instead of taking the best one and just being like, boom, this is it. It's like I would spread it around, hoping that I would get a big winner out of it. But in reality, you always know which one is the best setup. That's why you're the trader. But it's like psychologically, I was still there, and it was like as soon as I stopped trying to have that many positions, and I would just focus on like two I can handle really well. It's like my results are always better. So these guys actually remind me here like every day because my boys are here, and they're working the business. They sit there in the back and do this. 2 positions. Are you in more than 3 positions? Because they know like the day that happens, it's like, you get a downtick in the market or something, and you got 3 of the same setup. It's so hard to sell out of each one, like the delay of by the time you get rid of the first one, then the second one, the third one, there could be a 30-second delay. That downtick in the market essentially caused me to lose like $1,000. It's like if I was just in one position.
Part of it is you build these watch lists with like 50 or 100 stocks, and you've put all this time into it. You want to enter these stocks, and that's why in the report we've got a watch list, but then we've got a focus list, and that focus list is really what you're focusing on that next day. So there's only 5, 6, or 7 stocks in that focus list to keep you on that track of just getting the best setups. And you've still got that watch list if you want to go through and trade something else, but it really focuses you on those best setups.
So that's huge, right? That really keeps you focused. So let me ask you this: so a new guy comes in, he's interested in swing trading. How much time does he have to devote a day to kind of all of this that's going on? If he just wants to do a little bit of education, but it's not like you're gonna try to make a living out of this. Yeah. You wanna learn about it, but it's not like, oh my god, I gotta spend night and day. Like, what do you gotta do?
That's what I was doing when I was trading part time. I was up till 2 in the morning, researching stocks, scanning stocks, flipping through thousands of charts every single day. So basically, when I created this report, I created it for what I wanted when I was trading. So basically, this thing is going to have everything you need to trade for the next day. There's market analysis, sector analysis, trading setups, the watch list. There's education at the end, and it takes about 5 or 10 minutes a day to go through and read. And in time, you really will start to pick up on what's important.
And then you will send out the alerts when you're buying something. And
when I'm personally buying something, I'll send out the alerts, yes.
So Paul, essentially what he'll be doing is just like how we have these type of, charts and stuff like that. It might not be at the exact time. He might just send out a buy alert of what he's doing. but at some point during the day, he will send an annotated chart like this of kind of what he's looking at, the reasoning, stop losses, all of that stuff. So when he calls out a trade, it's not going to be like, hey, I'm buying this. You're literally going to have a plan of, I'm buying this. This is where my stop loss is. These are potential targets. And then, of course, nothing always plays out perfectly. So there might be audibles in there, at any given moment. And so he will send out an email telling everybody, hey, change of focus here. We're moving the target or whatever. Market's changing. And so if he does call an audible, he'll send out an email. So this type of service is geared towards swing traders, part-time traders, people that have jobs that can't sit and watch somebody, on video or sit there and day trade or sit in a chat room. These trades will get emailed out to you. I believe it's going to be about 2 weeks, and then we're going to add the text messaging feature. It's just going to take a little bit of programming. So, Paul, let me ask you this. What are your typical kind of hold times? I noticed in your reports that you're kind of right now 2 to 5 days, 2 to 14 days. Depending on what's going on with the market.
It really matters. What really decides that is when your stop and target is hit. But generally, it's somewhere between 2 and 14 days, depending on how the market's moving. But it's not something you have to sit there and manage and watch constantly. You can enter a trade, have your target set, put in your stop when you make the trade, so you don't have to worry about losing too much. So it's not something you have to watch real closely like a day trade.
So if somebody has an iPhone, iPad, they're working, they can duplicate this via phone.
Yeah, right when you're at your office, you've got your phone and your iPad, just you can place your trades right there, put the stop in, manage it, and I'll go over that how I did it and how I do it.
Cool. So I think we have a good idea. So guys, this service is going to be $99 a month. If you guys want like an annual plan or something like that, we'll give a discount of $699 for the year. Just email swing@bullson.ws and we'll get those annuals set up. You can go, and we do have a free trial on the site for it. So you guys can come in and take a trial on this and start seeing how we do this and how we develop it. And so essentially Paul will have a swing trading section to what he does. And so in there'll be a blog, the reports, and then when he calls out alerts, he'll be sending it through our website and they will come in your email. And so they'll literally say swing trade, and he's going to be coming in and telling you the buy price, potential targets, stop losses, and really any other notes. When he used to do this, I remember the notes would be pretty detailed, kind of what he was seeing or the setup or things like that. And then throughout each week, some of the trades and stuff that we do, Paul will do like a trade review of kind of what he saw, why he took it, and then kind of what happened, so that you guys can learn and start to, understand the methodology. And as you can see, he doesn't use too much stuff, but the more type of trade reviews that he does, right, you're going to start to really see the method. And that was one of the things that really helped me was, he used to put them on his blog and talk about it. Like, he'd walk me through one of his trades. And so then I was able to see, all right, that's what I got to do when I see the same type of thing. I thought that was pretty helpful. Let's open this thing up to some questions, and then we'll get moving.
Okay.
So I'll read these off for you, Paul, and hold on 1 second. Murthy's mentioning as Paul's methodology will be different in regards to charts, time frames. Will you be doing some type of swing trade class in the future?
Yeah, I think that would really be beneficial. I wouldn't have any problem doing that.
Cool. So, guys, we're just getting started on this stuff. So, as time progresses, just as you guys saw with, our website, Bulls on Wall Street, as time goes, we add things and make things better, and you guys are getting in on the ground floor of something cool. So, Leo's asking, Paul, can you take a look at Facebook and just kind of go over maybe something that you're seeing in this? Like, what are you seeing in Facebook?
Do you have a chart there that you can pull up, or?
Yep, I'm pulling it up right here. So actually, now I stopped using the RSI because my hold times are so quick.
Well, I have, Facebook is not on my watch list, so I haven't really paid much attention to it. If I just eyeballed it right here, so we've got this basing pattern here. The volume pattern is not very good. That's the first thing I look at. I look at what's happening with the price pattern. We see kind of a basing pattern here, some lower highs. But the volume pattern within this basing pattern is not very good. So that would lead, just initial impression, there's a head and shoulders kind of pattern here. Is this arrow visible to you guys?
No, I can draw.
Okay. You've got a head and shoulders pattern that's developed. This basing pattern here, there's a lot of negative volume. So that would lead me to believe that there's going to be some downside action here. If we were looking to see if the stock was going to go up, we'd want higher green bars, lower red bars, basically. So I would not probably trade it to the long side right now.
Sure.
As a swing trade. On shorter time frames, there might be something you're seeing here, like a bounce off this trend line or something, but for a swing trade, I wouldn't look to go long.
So even as a short-term trader, even for me, like this stock is stuck in this like monster range. So like, without really a trend, right, you're just kind of stuck in a chop zone. It's like, you're in a range, so it's like, where are you really going to go? Your downside is 56, your upside is 62. So you're kind of right, $3 here, $3 there. You're just stuck in a range. There's nowhere to go. At least for me.
And there's nothing really giving you a high probability trade.
Yeah, and then the other thing is, right, once you're in distribution, it's like you can't trust any breakout or any break of range. And even the break of range is at, $62 or so. You're far off from it.
So if this volume pattern stayed like this and we actually got to move up around where the top of resistance, I'd actually probably look to short at that point. But right now, there's really not much to do with it.
And buddy, as time goes, so say this thing, maybe this thing evens out for another month. During that time, the volume pattern could change. So like this is a recent volume pattern, and it suggests that probably this stock's just gonna be stuck in a range for a while. That's kind of what I see out of it. You know what? Another month from now, maybe the market does something more constructive, and that might start changing the volume pattern in this too, as people start getting more into speculative stocks and things of that nature. Right now, it seems like it's like oil and gas, and then all the grandpa stocks are going.
Yeah.
You see like when you see like Kroger's and stuff like that start running, it's like, oh boy. Hey Septine, how you doing? 2:30 in the morning over there, huh? Jeez. Let's see. Anita Calloway is one of my students. She says, hey, he mentioned he had a $5,000 account. Anita, it wasn't 3 or 4 years ago he had a $5,000 account. It was when he started, which was probably a much longer time ago. He even coached me well over 3 or 4 years ago. She says she wants to know how much money you have now. So my students are very upfront. He's going to ask you everything.
Well, it is. It's 6 figures. It's enough to trade full time. So that's enough information on that.
Sure.
6 figures.
Sejal Patel, one of my Indian people. Sejal's in all her classes. So Paul, she says, so Paul, do you use volume as a price indicator for a 6-month period, then to determine your entry and exit, as well as support and resistance levels? I'm not sure if I understand that question.
Yeah, I don't understand what.
Or do you use daily volume in candles to determine them? Sejal, we're gonna need a little bit. You want to walk through? You want to? A little bit more details on that.
Basically, I'm using volume to see if money is flowing into or out of the stock. So that gives me an idea of if I want to go long, if there's basically if the big traders are taking positions in that stock or moving out of the stock.
So Brian's got a good question. Brian's asking, Paul, why don't you use a MACD for divergence? I thought this is more popular than RSI for divergence.
I never found a big edge with it. I've tried everything. I've tried all the different indicators, and what I kept coming back to is RSI. That's what seemed to work best for me.
Cool.
I did do the MACD divergences and
I never found any
crosses below that line, and I didn't get any good results with it.
So moving average crossovers and MACD were like the two things I didn't really ever get any juice out of.
The moving average crossover, there's nothing really real about it in the sense of how price is moving or how volume is moving, but it's just that everyone's looking at it.
Yep. Yeah, I do pay attention to that.
We basically created that.
So this is from Chris. Chris is one of my students. He's actually a star trader in the making. He's got his he's been full time now for since November. So he quit his job in November. He's been trading full time, doing really well.
Nice.
He's been trying to dabble into the swing trades. I taught him mostly day trading, and he's got his own website now where he does classes and stuff like that on day trading. But he's got a question in terms of Paul, do you find that you have better performance when entering swing trades at the beginning of the day, end of the day, or some other time? He's mentioned he tends to enter most of his swing trades now at the end of the day. He's been finding better luck at that. He's not sure if there's really a correlation of when you enter it.
It really depends on the setup. Generally, the time of day doesn't matter to me that much. What is important with the end of the day, sometimes I'll watch and look for hammers, reversals. Those are hammers, a candlestick pattern that kind of can signal you in on a reversal. The SPY trade we talked about before, when that hammer printed, that was at the end of the day, and when I saw that, I entered just because that was the trading signal. But in terms of for a swing trader, time of day, I don't think it's that important. For a day trader, it might be because you've got volume at different times of the day, I think. But for me, it's not that important.
Hey, Stephen Hearson, I'm not sure what book you were mentioning. Why don't you email me, and I'll make sure to get it to you. I'm unsure of which one we were referring to. Dun 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 dun. Chris is asking one more question. He says, do you have a preference in terms of price for your swing trades? Do you find that certain price ranges work better than others?
But does he mean like a $200 stock versus a $20?
Yeah, he's saying Chris is new, so he's still trying to find like his mojo.
It doesn't matter to me. All that matters is volatility, how much the stock's going to move. Whether it's a $300 stock that you have less shares in, or a $20 stock that you have a lot of shares in, what matters is the price percentage. So the actual number doesn't really matter.
Cool. George Gaddis mentioned, does the RSI divergence work intraday? That I'm actually not sure. I personally don't, so all the stuff that I use on my daily charts, stochastics, Bollinger Bands, all those type of things, I don't use any of those intraday. I just use volume and then moving averages and then, price better. Intraday is like, it's so fast. The more I think the more indicators you have, the more screwed up you get mentally of like what you're looking at, because you get conflicting signals. Because for 5-minute charts, it means like you're essentially getting your signals. Like if you use the stochastics 533 on a 5-minute chart, I mean you're getting signals pretty quick, and so that's gonna really knock you in and out of trades really really fast. Where a lot of day trades, I might hold it almost the whole day. And so I don't even want to know those overbought, oversold signals. Daming. So this is actually a really good question. So Daming's asking if you don't hit on one of your trades, if you don't hit the second target or hit the stop for a while, how long are you gonna hold the stop before selling it? So it's right if it just flatline.
There's no stock answer to that. If you see, it's kind of, I feel, one, if it's been a really long time and nothing's happening, the stock's kind of turning into less volatile stock, I'll pull out of it. But generally, I try to stay in as long as I can. If it's been, for a swing trade, if it's been a month, then I'm out. Even sometimes 2 weeks, I'm out. But a lot of it depends on what you're seeing. And also, if you see a signal in there that reverses what you were doing, say all of a sudden you start to see distributed volume, then I might pull out because I no longer have that trade signal that I had before.
True. So I have a bunch of questions here on whether you ever use options to do any swing trades, whether it's shorting or just for a swing. Do you ever do options?
No.
So
my theory is you have to be an expert at what you're doing, and this is what I'm an expert at. Maybe someday, if I learn it good enough, the actual option side of the trading, that I'll give it a shot. But right now, I don't.
I stole that from you too. So everybody always asks me like, "Do you ever trade futures?" and "Do you ever trade this?" And I always tell them like, in trading, it is better to be the master of one than a jack of all trades.
Exactly.
Jack of all trades, a generalist in trading. I don't think they ever make big money, but they definitely don't make consistent money.
Yeah.
From what I've seen, they might go from time to time making money, but the jack of all trades is like they're hit or miss because they're just okay and everything. And so it depends on whether that sector or style is hot. They might make money. Where if you are like the master of one method and you have just complete mastery over it, you understand it. Bull markets, bear markets, flat markets, you have something for all of that. And so now it doesn't really matter what the market does. Like, at least for me too, like no matter what the market's doing, like I'm pretty much okay. It's like when I'm not making as much money as I want, it's more mental mistakes of not being patient and things of that nature, rather than, oh my God, there's nothing to trade. There's always something if you're good. Or you wait and then you load the boat when it's time. But being a generalist is, I just don't see very many of them succeed long term. So let's see. Bobby's mentioning, is there a set number of stocks you look at specifically? Say you keep these on a watch. Is there a set list of, say, 30 stocks that you look at all the time? Like you just have some go-tos?
I have I have, the market leader type stocks that I'm always, even if I'm not trading, I'm watching them. Apple, Netflix, Tesla, a few other stocks. Then my watch list is changing probably every week or two. On a Saturday, I'll go in and just totally revamp the watch list, take some stuff out, put some stuff in, and during the week, stuff is being added and taken out. But generally, it stays pretty consistent for a week or two, and then if you were to look back at it after a month, it's changed a little.
Yep. So I kind of go both ways. I have like a go-to list of stocks that are like 200 that they're like trending stocks, and I kind of know, like Netflix, GMCR, like a handful of them that have just been moving in recent. And then I run the scans, the 4% breakout scans, the volume scans, the OBD scan, all that fun stuff, and kind of compile it between those two.
I think for swing trading, you can do that with the indexes, and the indexes I'm constantly watching and trading, and you get a good feel for that. But for the actual stocks you're trading, you want the stocks that are in the setups you want. So
Yeah.
Watching the same stocks over and over again kind of becomes a waste of time unless they're showing up in your scans.
So my man Ankit Patel, Ankit from Austin, Texas, the Bhangra teacher, the best Bhangra teacher in the South. So Ankit is asking, what is the software you use to run your scans, and do you have any setups that are like kind of like your favorites?
For software, I use Telechart. Sometimes I go away from it and I'll use FinViz or stock charts. I think you can get away with just using the free stuff. The reason I like Telecharts, you can put in your scan parameters really easy. It spits it out, and I'm just used to it. But Telechart is mostly what I use. And what was the other question?
Anything that you have, like out of the setups you trade, anything that's like a favorite. You see it and you're like, man, that's mine.
I love the rubber band setups that you talked about before, and I love breakouts that pull up to the gap fill area. When stock has broken out, and then it generally most people are buying at that breakout bar point, and if it falls into that gap fill area, they get scared, pull out, and then the secondary support comes in, and that's a great place to enter.
So you actually let that gap fill a little bit and then get in.
Yes, yeah.
Cool. Telechart. How awesome is Telechart? That's like the one tool that, like, literally I can't go without. It is.
I've tried to go away from it, and I always come back to it.
I actually use the old one. They've updated to like this new one, and I still am using like the old one. Like when you were giving me the scans, like when they had the PCFs.
I actually updated it, and I don't know how to go back to the old one. I don't know if you can go back to the old one, but
you can.
I wish I could.
Yeah, you can. On their site, in the support files, they have one for the 2007. I like the new one too. It's really fancy. I find that's kind of better for intraday and stuff like that. Watching charts, because you can make really cool layouts. I just think for end of night scanning, like having the desktop application, old school Telechart is super fast, and it's just
I miss that. Well, let me know how to go back to that old version.
Yeah, I mean, this is what I use. So I tell my guys that when we do the classes, I have them download both. So it's like intraday, I tell them, you can keep the new Telechart open because it's got all the cool features. But end of night scanning, like nothing beats the old dot matrix Telechart. It's so fast. All right. Michael Lars has got a question on volume. So he says that many traders have noted volume has been low for quite some time over the past couple years. That's true. Like QQQ, for example, today. The chart is shaping up a bit, but down days are clearly larger than the up days. So essentially some type of distribution. Does this change your position sizing in the market, since the direction is a little bit more unsure, and that we are, in the 5th year of a bull market? He's essentially looking at the Qs.
Okay, well, I'm looking at volume relative to what's recent. So if volume is less now than it was 1 or 2 years ago, that doesn't matter. I'm looking at volume within the setup I'm trading. So we're looking at the Qs here. Can you bring it up closer to like a 6 month?
Yep.
And there is kind of if you look it out here, you do see kind of a head and shoulders pattern forming here with a negative volume pattern. So from that time frame, it doesn't look great. From a shorter time frame,
so you can often have conflicting patterns. So oftentimes you may look at a 30-minute chart and something looks constructive, and then you're looking at a daily chart, and the picture changes because the time frame.
Yeah, it all depends on the time frame you're trading. But it's not telling right now. It's not telling us a whole lot. It didn't seem to.
like kind of neutral.
Which is why I've been using SPY right now instead of the Qs. Once the Qs start giving good signals, when I start analyzing the market, I'll switch over to that. But right now, the SPY is giving us much better signals than the Qs are. Because here, I mean, you see this topish kind of pattern, but at the same time, if you just look in this this range that's developed over the last couple of months, it kind of looks positive. So when you have conflicting stories here, I basically just stay away from it. There's no need to trade it.
No edge.
Exactly.
So, see, Ali is mentioning, when is the best time to exit the trade if the stock is actually going in the direction you want it? So, stock's blowing past your targets.
When it hits your target, take some off the table, lock in that profit, move your stop up to entry, and you've got that free ride. And then with the rest of the trade, you can use a trailing stop. You want to look at, was he talking about new highs or just in general?
Yeah, in general.
In general, you want to look at resistance levels that are looming ahead. So if you, like, let's say the stock was at 91 here, and there happened to be resistance at 95, you would hold on until at least 95. And once you hit 95, you can take some more off the table and leave a little bit more position to ride out some more. Move your stop up again.
So, boom, 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 boom. Bob, will the day trader plan include the alerts for the swing trades as well? I'd like to day trade now, but I also would like to do some swings in my IRAs. Bob, they're two separate things. You know, I'm sure we can work out some type of discount if you're coming into both rooms, but two separate things. Luis, how do you predict gap downs at the WWE on Friday? Luis, you can't predict what's going to happen in earnings. There's not a single person I know that's actually a good earnings trader.
And with swing trades, if earnings, I watch earnings, and if earnings are coming out, I get out of the trade. Unless I've already made a profit and I'm just holding it, I don't trade stocks where earnings are near.
I've never met anybody. I've seen a lot of people try it. They love it. People love it because it's like, you're always thinking, man, if I have 1,000 shares and this is the one that gaps up $10, like, but what are the odds of that? Zero.
And what if it loses $10 and goes against you? So
and yeah, right? Like WWE. Look, who doesn't watch WWF? Right? It's a $10 stock now. You would never think that these type of things happen, and they happen all the time. So can't ever hold stocks through earnings. Chris, I used to use Ticker Spy to see which sectors and indices were hot, but it went offline. Any suggestions on sites or resources to look at indices and sectors? I just use Telechart personally.
I just use Telechart, and I'm constantly watching money flow, so I'm looking at what the sector has done in the last 30 days, what's it done in the last 5 days, comparing that to see where the money is going. And there's a section in the report where I list the sectors that I'm watching. So right there you have 10 or 15 sectors that are working.
Cool. Ankit, do you move to a closer time frame to choose the right entry based on what you see, like a 5, 10, 30-minute chart, or are you using the dailies? These guys are all very focused on multiple time frames because I told them that day trading.
Well, you're day trading.
Yeah.
For swing trading, I mean, if you want to zero in on an entry, you can. Generally, it's not that important. If you've got a price point, if you're looking to enter around 100, and your target is 110, and your stop is 97, so you've got a 3-to-1 risk ratio. If you enter at 120 cents and 150 cents, or even 101, it really doesn't, in the long run, it doesn't make much of a difference.
Yeah, and so one of the things that guys when you're day trading, every penny matters. It's like you're 5 cents off, 6 cents off. Well, like for me, if I'm 6 cents off, that's $120. I could have 2,000 shares, so that adds up. when you're swing trading, you're going for so many dollars, and what's 10 cents? You know. And if anything, if you align it so closely, trying to time it to the penny, you're going to sell too early too, because it's like you spend so much time aligning the perfect entry. As soon as it pops, you're going to turn it into a day trade. You know, that's what happens to me if I really, really zoom in too much on my swing trades. I sell prematurely because I focused in on getting the exact 1 penny entry. That means that, right, you were risking so little that as soon as it pops $1, you're like, I timed it to the penny and risked 10 cents.
Yeah.
You're taking your profit.
So for me, basically, if you're trading one time frame, stay on that time frame. If you see a different entry, sometimes I'll trade 2 different time frames with 2 different trades, which gets a little more complicated. But for that trade you're making, I generally just look at one time frame.
Okay, this is a good question. Hold on one second. Farood, are we able to follow when Paul buys in, when he sells, and how much? Fahad, he'll be giving the buys and sells of how much won't really matter. You know, whether somebody buys 6,000 shares or 100 shares won't matter to how you're managing your portfolio. So I'll leave that one up to Paul, what he's doing.
Well, you know, that really depends on your own account, your own portfolio. So
it just doesn't matter.
I give entries and exits, but actual position sizing really depends on your personal account.
And we could always do it with a model portfolio of 30,000 or whatever, but in the end, it's like you still have to size a position according to your account. Whether we're using a model portfolio or a real portfolio, you got to use yours, because if you try to mimic anybody and you don't have the exact same circumstance, things get really, really crazy. Justin's got a really good question. As a swing trader, how often do you check your positions? Do you have a set time, like every hour, or?
I used to be really bad at that when I had my full-time job. Every break, every second, I was rushing to look at them. And what that does a lot of times is you end up micromanaging those positions, and you pull out when you shouldn't pull out. So I learned to basically just let my stops, let my targets work for me. So I check probably, I look at it more now that I'm trading full-time, but generally I maybe look at it 3-4 times a day.
All right, so you're not Justin. If you're gonna look at it all day, you might as well just be a day trader, right? It goes against it. What book do you recommend for identifying patterns? Tom, I actually personally stopped recommending books. I found they were almost counterproductive. Thomas Polkowski does have the Encyclopedia of Chart Patterns. It's like a 1,600-page book with 1,000 chart patterns. That's like the Bible of chart patterns, but
a lot of those chart patterns end up being kind of meaningless, and they don't really teach you how to trade within a setup. I think most of it's just trial and error, just figuring out stuff rather than looking through books.
So what I did in our class, Paul? Is like they have triangle pattern, ascending triangle, descending triangle, descending triangle, like all the different triangle patterns. I just call them all flags. Because
exactly.
you trade everything the same way. It's about how the price develops, how you build a case and confirm everything, and then what happens when the scenarios play out in terms of how you're managing your risk and things like that. So
exactly, because those patterns, we've created that. I mean, it doesn't really exist.
So it's all a flag.
The market doesn't know a descending pattern triangle versus whatever triangle it is.
So all those patterns that you'll read like in a book with 1,000 chart patterns, they're all variations of literally a few different things. A stock that's in a range, a stock that's uptrend, downtrend, and then a tight consolidation. I mean, they're like just a handful of different things that you're shaped with, and that's it. And besides that, you're managing risk and looking for MAs and stuff that kind of pick some targets, but it's a few basic things that are over and over. It's like, I always love it. I teach everybody everything's a chart pattern, a flag, and it's like somebody's like, what's a descending triangle? And it's like, it's a flag. What's an ascending triangle?
A flag.
Flag. Because you're gonna trade it all the same way. If it breaks to the upside, great, you make money. If it breaks to the downside,
exactly.
You stopped out. All right. Hey, Penang. So Penang's question is, when you buy a stock, what do you put your stop loss at? Do you put it at 1 or 2% or lower than your buy price, or does it depend on the chart? So, Penang, that actually depends on the chart. We use support and resistance areas based on the daily chart. So, Penang, you have to think about if you use a random stop loss of 1% or 5% or 10% or 2%, then you will randomly be stopped out. There will be no rhyme or reason to your result. If anything, how you want to look at a stock, or how I tell my guys to look at it is, every stock kind of has like a line in the sand. A line in the sand of where if it stays above it, your setup is valid and it's holding support. And if it goes below it, that's kind of your oh shit meter. My setup just became invalid. I no longer have a reason to hold the stock, and it's broken support. And so you kind of have, right, that's what we're looking for. Where's the line in the sand?
And that line in the sand has to be within your percentage of loss that you're allowing. So you have two factors you're looking at there.
So Mike is asking, how do you find your stock? So can you give kind of a quick 30-second rundown of what your scanning routine is?
Every day I'm looking at stocks that have broke out, and then I just put them on a bigger watch list and then see how the price patterns move after that. I'm scanning for oversold, overbought stocks for counter trend plays. Within the scans, different things. I'm looking for low float stocks, high short interest stocks, momentum stocks. So basically, it's this routine of going through 4 or 5 scans I have set up and finding the patterns out of that.
Cool. Brian Paul, so what's a rubber band setup?
It's basically oversold or overbought setup. So you want the stochastic to be extremely overbought or oversold, meaning above 90 or below 10. And you want price to be extremely far away from wherever the trading range was. And at that point, it's kind of like a reversion to a mean trade where it's going to snap back like a rubber band would snap back.
So that's one of my go-tos. A couple of people have some questions that Matt Hill and Steve. Do you ever swing trade stocks short?
All the time. Yeah, I mean, we just did with SPY last week, which is an ETF index, but same thing with stocks.
Bob wants to know: do you only trade high dollar stocks?
No, I trade anything over $10. $10 is kind of the limit I've set for myself. So anything above $10 I trade.
That makes
and
sense.
volume above 200,000 or 300,000.
It's very hard to hold overnight stocks under like $3-4. Like I day trade, even the the rubber band setups that I do on the cheap price stocks, I won't hold them overnight. Like I gotta hit the crack and do it for day trade because when you hold $3, $4, $5 stocks overnight, it's like it's something's coming around the corner.
Yeah. I don't put myself in that position to be to have the butterflies at night.
I did it actually accidentally 3-4 months ago. I very rarely will call out swings in the chat room. There was just one stock that just looked great, and I didn't check it. I accidentally just looked at the chart and bought it and swung. And it happened to be a biotech stock that was like $3-4 or whatever. I'm on the beach playing volleyball, and so after the market closed, I teach a class. We go play volleyball like every day or play basketball. So I'm playing volleyball on the beach, and somebody text messaged me. It's like, hey, 38% dilution on AM24 or whatever it's called, and it's like, I'm like, well, there goes a few $1,000. It's like, back to playing volleyball. It's like, shoot, you get in there, and I come back, and this stock is just destroyed. Like, I didn't even have very many shares. Very small investment, 2,000 shares, $3 stock, but it's down $1. So it's like, boom, there goes, $2,000.
So I learned a long time ago to stay away for swing trades. To stay away from that. If you're day trading and can get in and out real quick, then that's fine.
It's bad move. I should have known it too. Somebody usually would be like, "Well, that breaks your rules. It's a biotech stock." One of the things that makes me lazy now is the chat room is like, there's so much information. if I'm on video and I say, hey, what was the news on XYZ? It's like you get 50 people say da-da-da-da and post all the links. So it's like the one time like I didn't do the research, the $3 stock will get you. Xenia is mentioning, do you use stock charts primarily?
I'm mostly using Telechart. Stock chart I use for annotating stocks, but I mostly use Telechart and Finviz for the scanning and going through my charts.
Cool. Let's see. Justin's asking, how do you manage a trade if there's unexpected bad news overnight and the stock opens down? Or do you suggest to take only less risky trades like non-biotechs, when you're doing overnights? So, Justin, I actually won't hold biotechs overnight for swings unless I forget.
Well, yeah, that for me, I really don't care what the sector is, as long as it's a sector that's trending or showing up in my scans. And everything I do is holding overnight. If I get a gap down again that passes my target, I usually try not to overreact right away. Sometimes when there's a gap down, it's going to go back up to a little better price. So I'll set an area. If it gaps down, I'll put my stop below that gap down and hope that it kind of pulls back a little bit and I can get out at a better price.
So I do the same thing. I give it like a good 5 minutes essentially, max. If it holds the low, I'll try to recoup some of my gain.
Exactly.
But
other than that, there's not a whole lot you can do.
You're kind of shit out of luck. Most of the time, you really just gotta fail.
Yeah.
So Eric is asking some questions. He desperately would like us to look at moves and see what we're showing. He says stochastics is making higher lows and prices on the 200-day moving average. It almost to him looks like a reverse head and shoulders after today. Would you enter tomorrow or wait for a pullback to the 200-day moving average, or even not take it at all? I'm kind of mixed on this one.
There's not the 200 moving average is right here. It's broken the 200 moving average. I don't really worry about the higher lows on the stochastic. That's just oversold or overbought indicator. It's right in the middle, so that's okay if you want to enter either way. What I like about the entry here, even if, say, you don't know which way it's going to go, and you decide to go long because of the 200 moving average break, it offers great risk reward here. So you can place your stop under these bars, under that hammer there, at, what would that be, maybe 520 or so, 515 or 520.
Yep.
And you've got the opportunity for a big upside move, so you're going to get a risk ratio that's probably 4-to-1, 5-to-1. So even if you don't guess right over time, if you're right 30-40% of the time with that risk ratio, you're going to make a lot of money.
Cool. Dun, 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 dun. Robert says, what's a hammer candle?
If we're still looking at Goog, that big candle here, where that 200-day support line was back in between April and May.
Oh, yep, right here.
That's a textbook hammer right there, and that when it closed on that day, when we were talking about if you want to wait till the end of the day, this would have been a perfect entry right there. You could have got that bounce there because it was obviously going to bounce here.
Dun, 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 dun. Iqbal says, where can I get these alerts from Paul to study? Iqbal, so once again, Paul's service, he will be calling out the trade. So all the alerts, they will be emailed to you, and they will be, you'll have them. Save them, right? Save them, post them on a chart. Fahad, is it possible to follow Paul exactly when he buys and sells, especially for beginners? I want to learn by shadowing in the beginning. Fahad, so with swing trade, the exact second that Paul makes a buy or sell is not going to necessarily matter like it would a day trade. If he's 30 seconds late or a minute late, it's pretty much the stock is still going to be around the same spot. But he will be sending out email alerts that will show up in your box as soon as he sends it.
And generally, you don't with a swing trade, you don't need to get in that second. If I send it at midday and you don't see it till the end of the day, usually there's not a lot of movement. You can usually get in at a different time.
George, is this the membership that you have now? George, probably not. If you're in the chat room, then that's the day trader service. You can always cancel this and move this over. So, guys, one of the keys that is I believe one of the keys of being a great trader is to trade a method and a style that matches your personality, but also what you have going on in your life. So if you have a job and you have all this stuff, like meetings and things you have to do, day trading might not be for you. Also, if you get freaked out by a stock moving up 5-10 cents and you're a micromanager, day trading might not be for you, right? So you have to figure out what you like, and then also what's going on with your work situation and family situation, and then find a system that fits that. So if you're finding that day trading is not for you, this is something that goes the other way. Boom, 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 boom. So, Ricky, this is a good question. Ricky, hey, Ricky Neal, by the way. Hey, good to see you. This is my boy. Ricky, I'm following the home builder sector and looking for swings in DHI and coal. Is it advisable to use ETFs to build the case, like to kind of figure out if you want to take this trade? Would you look at the home builder ETF to, measure whether this is something that
generally home builders tend to move with the ETF? So the ETF for home builders is really important. That is the first thing I look at. And I usually, for a sector like this, I won't start trading the stocks until I see, until the ETF starts showing up in my watch list, my scans.
So take a look, essentially.
And here there's a nice, we were talking about hammers, there's a nice hammer that has printed near the low here. So it could be set up for a bounce play, but again, you're getting conflicting signals with the 50-day moving average going down. Volume is not good, so I'd probably just move on to a better trade. There's no need to trade a low quality setup.
So Johnny boy, is this extra cost for us who trade through clicks? So Johnny, our hedge fund is a day trading thing, and hedge funds, we don't hold overnight necessarily. So this is a completely a different focus on what we're doing. Dun, 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 dun. Let's see. So Carlos says, I'm mostly interested on the education side. I want to learn rather than just follow. Will there be some type of teachings, on how to run a scan or how to eyeball a chart? Or are you going to throw in some education?
Every day at the end of the report, there's a trading education section, and it'll basically hit on stuff within the report that needs to be explained. I think slowly as you read more of the reports, you'll pick up more and more. To the point where if you've been reading it for a month or two, it'll have been like reading a book. And I think we do have an idea of some classes later on also.
Dun, 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 dun. So let's see. Please, would you say that your method is good for options trading as well? Roderick, one of the things is, even if you're trying to get into an options trade by using this part of the method to help time, options has many different things that price it and value options that have nothing to do with charts, I've noticed. So I'm not sure, Paul would probably better be able to say, but I've never found a good correlation often.
I guess there's so many different ways to trade options. It depends what you're trying to do. If you're just using options for leverage, which some people do, I think then you can trade the setup with an option. But I mean, there's so many different kinds of options trades that it really depends. And I'm not a pro at options, so I can answer that.
Jeremy's asking, how many trades on week do you do?
It really depends on what's setting up. I have some weeks where I've got a ton of positions and I don't need to add anything. So not a lot. If the setups are working, you get tons of setups and tons of trades.
Joe's saying what determines the length of the swing if you're holding for 3 or 4%. So we went over that, right? You've got your targets and you have your stop losses. So once the first target's hit, you're selling off a piece and then letting that stock ride, right? That's your free ride.
Yeah.
Gene, what do you watch for money flow?
Volume within individual stocks, I'm looking at the volume pattern. For sectors, I'm looking at price changes, basically price and volume changes.
Richard Pacente, we haven't put anything together in ClickFund for this because I've only let the traders that are consistently making money hold overnight. So I'd have to change around the parameters a little bit. We'll figure it out in the future. James Wayman is asking, can this service be auto traded via like a Ditto trade or something like that? James, we'll look into that too once we get the ball rolling. Paul, we were talking about that Ditto trade, right? How it kind of auto trades in people's accounts. So I think we need to see how this. When you get a new service, there's so many little things that we don't really anticipate that are going to happen. There's going to be improvements and changes and all that. So we need to let this thing form and develop into wherever Paul is going to take it. He's going to be doing these reports. He's going to start talking to people and be like, you know what? I want to add this into it or take away this. And so the full structure will never be there until you kind of get started and you see what people are responding to. So I think that that's something that, will always be on the table, but, we still got to get up and running. So Alexander Lee says, I trade very well with a 1% risk per trade. How do you transition to take the next step, going 2 to 3% risk per trade, if you do that?
For me, it really depends on if I feel really confident about something. If it's a setup that works time and time again for me, I'll move it up to 2 or 3%. If I feel nervous, I won't take that trade. So really, it's a personal thing. If 2 or 3 is too big for you and you start to get really nervous and you make bad decisions, then don't do it. Stick to that 1%.
I have 3 setups essentially out of like the 20 that I know that like I'll go with the big risk versus the 1% risk. You got to have some data too, what you trade well and when you trade it, and also your mood too. Sometimes you're on a roll, and you might push in your chips a little bit, especially if it's one of your go-to setups. If I see my go-to setups and I'm trading really well, then I know that I'm able to kind of handle the size without getting freaked out because I'm in a groove. Like I'm doing the right thing when I trade. I'm doing the right thing every time. So I can step up the risk a little bit. Whereas sometimes your game is off. Like I've actually, in the past few months, like sometimes the market's choppy and my game's off for a couple of days. I move my risk to 0.5 just to kind of hit a few winners and then build my mojo back.
Yeah.
Charles, so is the swing trade service going to start in about 2 weeks? Charles, we are ready to go. So starting tomorrow,
I'll have a report out tonight. So it's going right away.
Starting today, we'll have everything up and running. So there'll be a report out, and if Paul's taking trades tomorrow, he'll be sending those bad boys out. Dun, 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 dun. Yeah, that's a really good question. So, can you please explain why you choose the settings you do on your indicator? Like, why do you? So I get this asked a lot. Like, why do we pick 20, 50, and 200 in moving average? I tell everybody because it's the most watched ones. And they're kind of
exactly because moving averages aren't real. It really depends on what people are trading. If people were trading the 100-day, that's what we'd use. But it seems like I think part of it is because the default settings on a lot of this charting software is the 50 and the 200. So everybody starts using it. The Bollinger Bands use a 20, so everyone starts using it.
It's like I've seen people. I tell everybody, it's like if I knew that a stock was reacting well to one thing and somebody told me about it, then I'd use it. I saw one guy in my chat room used like a 65 moving average, and I was like, whoa, like we're really, really getting into a weird spot. And he's like, well, no, I only use it in these certain situations. And he showed me some charts, and there's certain things that work well with it. And it's like, all right, well, in that case, go for it, right? Because you know it works.
Yeah,
so
and with
you just test things out.
With the stochastic, the reason the 533 works better in the time frame I'm using. If I was trading, if I was doing position trades, which are longer trades, 2, 3, 4 months, I use the default settings that Stock Charts uses. But for our time frame, we need a faster stochastic.
So Yogi Kun, what you're referring to, you're asking a question that's a day trade setup. So that has nothing to do with this. So what Yogi's asking is when a position goes green, but not at your target, would you raise your stop to protect your target, or would you allow it to go green to red and maintain a stop? So, Paul, I have this move that we use, like a red to green move. So, like a lot of times on momentum stocks, say a stock is up 10, 15% that day or whatever. You can be a regular stock that's up 5, 10% day. Oftentimes it might just open down weak. That first candle, people just sell into it, and then boom, you get a rebound right away. And then, it continues on with the trend from the previous day. So we call that a green to red move. I think he's asking, whether you move your stops when stocks go from green to red or red to green. I would say it doesn't have anything to do with swing trades necessarily.
Yeah, for a swing trade, you're moving your stop once your target is hit. Once you lock in that profit,
So, Richard, daily charts. So Paul's not timing swing trades on 5-minute charts, because 5-minute charts is an intraday chart, right? And so if you can't time a stock. If you think a stock could run $10, you can't time it on a 5-minute, because a 5-minute chart, it doesn't run clean for 5, 6, 7 days. You would get over 5 days on a 5-minute chart, you would get 20 to 30 false signals of breakout, breakdown, breakout, breakdown. You would be in and out of that stock 30 times. So it's not applicable.
Yeah, so basically you need to use the chart that's on the time frame that you're trading.
So Nick is mentioning, hi, Paul Canal. I'm looking at this GST of the daily chart. Combined with the RSI, the new 52-week high made today, it looks so strong. But the RSI looks like it's about to roll over. Does this suggest to you a potential break?
Well, this would be a great candidate for a breakout pullback for a swing trade. So basically, this probably, if it was under 10, if it was over 10, it would have showed up on my scans. It broke out over resistance, and now we'd be waiting for it to pull back to around 7. Great volume pattern here, lots of green.
So, Nick, it doesn't have to be about rolling over. This stock in particular most likely will just pull back anyways because it just broke out, but right, it's been up 8 days in a row. I mean, you just have a good shot of it coming back and testing the breakout spot in general, just out of common sense. It's been moving since $6 without a rest. And so oftentimes those type of stocks are going to pull back a little bit, but the volume pattern is great. Everything else is in place. So if you get a nice low volume, easy go lucky pullback to say the $7 area or wherever, where you start to see some support build, right? That's the start of something.
And the problem here is, it could continue to go up and then you just miss out on the trade. The problem is if you enter at this level, where you have to place the stop, which is under this resistance area, so you probably have to put it around 680. It has to gain a lot before you get a risk ratio that's beneficial to you.
Gabriel, I noticed that when swing trading stops need to be usually a little bit more flexible. Is this the case with compared to day trading? This has been my mistake with swings with tight stops.
Yeah, the reason I use a looser stop or a stop under the resistance is because most people are placing their stops right at resistance and they're going to get stopped out. Whoever they is, they know that people are placing their stops there, and they're going to try to wash those out. So I always place them a little under where everyone else is going to get stopped out.
Cool. Joe is asking, do you ever take any trades that are based on weekly time frames rather than dailies?
I don't look at weekly charts, no.
Me either. Because nobody ever holds that long.
Yeah, unless you're looking, to hold something for 2-3 years, I don't think it's worthwhile.
And then it just gets confusing too, because now you got this whole other time frame that's giving you the signal, and you're like, it looks great on the weekly, but then the candle itself is like $7. Like, how do you manage your risk or anything like that? Lawrence says, will swing trade shorts be available in ClickFund future? Lawrence, swing trade shorts are available in ClickFund right now for profitable traders. And he says, what made you take on Kunal as a student in the past?
What made me take him? I don't know. He kept bugging me.
I was bugging you, actually.
No, but when I really saw in him, I saw me maybe 3-4 years earlier. He was in that exact place. So teaching him was like teaching myself almost.
Man, I wanted it so bad too. I was telling this guy, so I tell him when we get a chat ready, how bad do you really want? Because it's painful. This process is like.
Oh yeah.
The smartest people try to get into this, and it's not necessarily those are the people that make it, And so it's like,
I think most people want certainty, and there isn't a lot of certainty, and that's why every time I talk about something, I'm talking about managing risk, about probabilities, because we can give ourselves an edge, but we don't know. We're looking for edges.
It's all a guess. With probabilities assigned to it. That's why, we've taught all these students, and we always have like this inside thing. If I get an Indian guy and he's like a doctor or a lawyer, it's really, really, or an engineer. Actually, lawyers not so much, but engineer, doctor, it's really, really tough because they are in a business where there's absolutes. Like as a doctor, right, it's like, if you're wrong, something can be a disaster, and so you have to be right. And as an engineer, like you have to be a pinpoint and right, because if your product is 1% off, right, it doesn't work for whatever you're building. And so they're coming from an angle of, number one, they're very smart, so they've always succeeded. They haven't had necessarily the beatdown that's coming. And then the second thing is you have this internal thing of everything you do has to be lined up perfectly, and you have to be right. And a lot of times, like, I tell these guys, like, I'm like, grip it and rip it. Like, the guys that think a lot, I'm like, that's it. Grip it and rip it. Just go. If you have a case, close your eyes, set your stop, and just go. What's the worst that's going to happen? You're going to lose a buck. Yeah. Don't worry about it. Let's go. And it's very, very hard for smart people that are not used to failing to allow themselves to be wrong.
Exactly.
It's a tricky thing, man. It's a tricky thing.
Well, what Michael Jordan said when he talks about failure, he talks about how many shots he missed. It's the same thing with trading. You're going to lose. You have to be able to accept that. And just learn to manage your risk, manage your trades.
Yeah. That's a good question from Wahid. Are the intraday gyrations of the market overly disruptive to swing trade strategy?
I'm not really looking at the intraday too much. If something major happens and a resistance point breaks out of resistance point or support, then I'll pay attention. Otherwise, the intraday moves don't really matter that much.
Kuong, this is a good question. As a swing trader, how does a distribution market affect your trade strategy?
The market is important. If the market is showing distribution, I'm going to be looking either to stay out and not take too many longs, or to focus in on my short setups. So looking at the distribution or accumulation in the market is important.
Cool. So Paul, probably 6 or 7 people have asked, with the swing trade service, every once in a while, once a month or every couple of weeks, would you be open to doing, a webinar or a video for the subscribers?
Oh, sure.
Kind of going over some trades or answering some questions.
Oh yeah, definitely a key question to answer. That'd be a perfect supplement to the report.
Cool. Dun, 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 dun. Mary, would SPLK be a good low risk short as a swing trade? I knew you were gonna ask that, Murray.
That's what you were yelling out this morning, right? I heard SPLK.
It was. It didn't go anywhere. I sold it.
For a swing trade, it's definitely a rubber band candidate. Generally, with rubber band candidates, I want the stochastic to be, around 10, and it was there, and now it's moved up. Yeah. So I would be watching it for another move down, and if it gets that other move down, there's going to be room to move up because the 20-day moving average is right here. So it would definitely be something that's on the watch list for a bounce. Or was she looking at a short setup? Or?
She was looking at a short. So I've taken this off kind of my short list for now.
For a short setup, for a swing trade on my time frame, I'd want it to pull back up a little more before I enter short. But it is a short setup.
So we've actually been playing in the chat room since it was $80. Our first short was here. Then we take the bear flag. Then I actually did both. We did both these breakout pullbacks.
For swing trading, up here was a classic swing setup here.
There was a few of them that were, especially these right here. That was straight out of the book, but it was like, I don't know. Do you have a thing? And I have this. So now, like, this stock has had freaking 6 bear flags. So it's like, how many of these work in a row? At this point, when the stock's down from 100 to $40 in a month or two.
It keeps working until it doesn't. So just keep doing it, and then when it doesn't work, you can get stopped out. You can take a small loss.
One time you'll get stopped out, but you won 6 times. Yeah. Cool. Dun. Let's see here. Brandon, very excited about the new service. The blogs are fantastic. Dun. Just want to clarify, the trade alerts will initially be via email. Correct. Brandon, there's no need for a chat room for this type of trading because what are you guys going to talk about in the chat room all day? I'm like, there's not much you can do. In terms of the service, this is a separate service from the day trading. So it's right, you're either day trader or swing trader. These are not combined. Otherwise, you got a $10,000 account and you got 3 day trades and 2 swing trades going. You have no way of knowing what's right and left. That was one of the first things that Paul told me. I was like, hey, I take some day trades sometime. And he was like, don't do them in the same account. You won't be able to measure your results. It was like the first thing that separate accounts. It's like I do that to this day. I will not day trade a swing trade in my day trade account because it screws you up psychologically.
That's one of the biggest problems with day traders and swing traders is not understanding your time frame or getting your time frames mixed up.
Derek's mentioning, does higher volume equally more significant support or resistance? So basically, if there's a resistance line or a support line and there's big volume there, does that make it more significant?
For the support line itself, I don't really look at volume. It's just how strong the support level is in terms of price action. The volume is important for being able to break out or break down from it.
Dun. New Pie, can you explain the breakout pullback? What is exactly that mean?
For swing trades, basically, when you've got, if you're looking at a breakout, there's going to be a resistance level somewhere. Once the stock breaks out of that level,
this was the last one I put. I remember this.
So this is where you entered right here.
So I let it break out, and then this ripped down to the 20-day moving average. I essentially added it for swinging my higher. It didn't hold the breakout spot, but because you had the 20-day right underneath, I was kind of eyeballing both areas. And regardless, I would have added it near the breakout spot with the spot under the 20.
It didn't hold that breakup spot, but it did hold that price bar.
Yep.
So if I was going to place a stop there, it would be under that breakout price bar.
Yeah, that's what I did.
And then it pulled back. Yeah, so you entered on the pullback.
Yeah, I entered on the pullback, so I got it a little bit less than 37.50, and then stop under the 20-day moving average.
So
I could have done the breakout bar, that bar too. But
so basically, you're looking for a breakout over a resistance level, and then you want the stock to pull back, because generally, if you enter on the breakout, there's a good chance the move has been made, and there is going to be a pullback, so you can get in at a better price.
Yeah, guys, usually a lot of times when stocks enter, like, they hit 52-week highs at their breakout, they've been running for like 3-4 days. Like, very rarely do you see a stock coiled up right under the breakout, and it's like it breaks out, and it's the first day of the breakout. Oftentimes it's like day 3, day 4, so you're already getting to a tired level. Vicky wants to know, what kind of returns have you been averaging of recent?
It depends year to year. This year I'm up about 25%. I've had years where I'm up over 100%. So it really, changes.
Yeah, it's any given year. Depends on how fun things get. What is Paul's opinion of when the overall market would be more conducive to swing trades? David, one of the things, he's swing trading right now. I mean, every day. But I'm sure there's easier times to swing trade.
What was the question?
When will the overall market, be more conducive to swing trades?
I think it's been conducive right now. I mean, we've had SPY moving resistance level, so you could have shorted it there. I've had a lot of breakout setups, a lot of pullback setups. So it's been a good market to trade right now.
So yeah, you've got one of the.
Because you're not necessarily just following a trend. You're counter trend trading,
trading the range.
If it's not moving, you trade the range.
So guys, right? There's 3 things you can do: trade uptrend, you can trade a downtrend, or you can trade within a range. And actually, things like stochastics and stuff like that, they work a lot better, I've noticed, in range-bound trading than they do if you're in a straight bull market, where you kind of got to throw stochastics out the window or make adjustments to it. Like, right, if the overall market's at 80 stochastics, probably everything's at 80 stochastics. You can't take it with a grain of salt.
So then you're
in a range-bound market, they work really well.
Yeah. So there, instead, you're entering on shallower pullbacks.
Yep. So, this is a good question. If the S&P's in a downtrend, do you hold off on swing trading? Longs, I'm assuming.
Yeah, you adjust what you're going to do. You don't hold off on swing trading. You just look for more short setups. Or look for that opportunity where the market gets oversold and you can play bounces.
So, Steph that's a good question. Can you, the swing trade service, is it only alerts and reports, or will you also provide some background and educational information?
Well, there is an education section in the report every day, so there will be education in it. And when I'm explaining setups, I work in what I'm doing in there too, so you're going to pick up a lot just by reading it.
Hey, Matt. Matt's question: what is the website of the student you were talking about earlier? It started November. That's Chris Zelinsky's website. It's Green Bar Trading. Dun, 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 dun. Hey, Sejal, your volume question. I still don't understand what you mean by overlaying it, extended time periods, shorter time periods. I'm not sure what that has to do with volume. You're gonna have to really dig into exactly what you mean.
What was the question again?
It was the person that was talking about, Sejal was talking about volume at price overlay over extended time periods. We're getting into some deep stuff there. I don't know what that means.
Yeah, I don't understand the question.
Oh, jeez. Sejal, explain it again. Sejal comes in all our webinars. She doesn't mind me hassling her a little bit. Tony T, what chart time frame do you use when you enter a swing position?
I'm mostly looking at the dailies. Was it the time frame?
Yep.
The time frame, I'll start with a year, then take it from a year to 6 months to sometimes 3 months.
Can you make a lot of money trading penny stocks? JJ, I mean, if you're good at it, I'm sure you can. I only know a handful of people that are actually really good at that. I've tried that and not been successful. I don't have any expertise in it. It's a whole nother world. Gary, back to the Gary Capoldo, back to time frames. It's the daily charts. Timothy Abels, aren't both RSI and stochastics lagging indicators?
Yeah, and I'm not trading off those indicators. It's more for confirmation of what I see in the volume and price pattern when I'm looking at it. So that's not really that important to me. It's really just for confirmation.
Tawan, can you share some common screeners and scans? Tawan, in Telechart, everything's got to be programmed. There is no, you got to code these things. It's like all this stuff. And you go here, like you have earnings, EP scan. Look at the coding on those things. Like, it's there's no closet thing where you can just go, hey, put this and this in. Everything in Telechart's got to be coded. So there is no common stock screener. Let's see. Hey, thanks, Kevin. Hey, can you make me an athletic greens?
You want to try what works? You said time limit?
Hugo, do you trade a lot during the summer? I hear it's very quiet.
What was the question?
Do you trade a lot during the summer? I hear it's quiet.
I trade all the time, yeah. Sometimes you might have a market that's dull, but there's always stuff breaking out, breaking down, and you're only looking for 4 or 5 positions. You can always find something.
Well, this is a good question. So, Jay Thompson, with a small account that can only buy, say, 1 or 2 stocks, how do you decide among the alternatives?
How do you decide?
So, like, if there's 3 alerts, do you take all 3 alerts, or do you just take 1 alert? Right? Say you have $5,000.
With a small account, alerts meaning 3 different stocks to trade. How are you choosing these stocks?
Yeah.
With a small account, I want something that's going to move a lot, and you can take on more risk at that point because there's not as much to lose. So I'm looking for low float. If it's got a low float, it's probably going to move more. Something with high short interest, where if it goes against a short interest, it's going to explode. Which generally I would take the one with the smaller float, higher short interest.
Cool. So, for your definition, what do you consider low flow?
It's really relative to what I'm looking at. So I don't necessarily look for a certain number, but if I've got 5 setups, I'll take the one with the lowest float or the highest short interest. So it's really relative to the stocks I'm looking at rather than.
Me too. So I for me, 100 million or less, I consider like a really low float, where it's going to be really explosive. So, right, if you have 5 setups that are all equal, I'm going for the ones that are, essentially going to be the most explosive or have the most range, the lowest float. 100 million seems to be, kind of the decent mark.
So what I'll do, like, say I have a focus list of 10 charts. I'll have it ordered by float. So I'll focus in more on the ones that have the least float. The number doesn't necessarily matter.
This is a good question. There are no guarantees. I know that. However, in your experience, what is the expected RR that you go for on your swing trades, and what do you typically average?
The RR meaning the risk ratio or
reward to risk ratio. Yep.
At the low end, 2-to-1. I try to get 3-to-1, 4-to-1, 5-to-1. But if it's a setup that I really like, I'll go with 2-to-1.
Alexander, what would you recommend is the minimum amount of money you put to risk on a trade to make full-time trading worthwhile because of all the fees?
I guess that really depends on where you're at. I wouldn't trade full-time. Depends if you got a mortgage or are you going to keep it in. Luckily for me, I don't have to pull anything out. But I think you'd probably need at least $200,000-300,000 for full-time.
Yeah,
at least.
Full-time trading is a whole different ballgame. Now, I noticed for me, at least in day trading, I try to trade a $300,000 account, and that was like a hot mess. My returns. But like if I keep it at like 50,000, I just use leverage or margin. I stay really aggressive, because my account's smaller and I want to take the money out every week. And so, like, psychologically, I could make more money with a much bigger account. Because I was easier off with the smaller account and leverage. But the thing is, leverage, if you suck, you blow up everything.
Yeah.
It's always like, a catch-22. Let's see, Cindy. I've been interested in taking your guys' classes for some time, but I have reservations due to my time limitations. The swing trade option seems like a perfect option for me. Will there be enough information in the report for me to actually learn how to swing trade without the training wheels, since there won't be weekly webinars? Cindy, before we get into that, Paul's a swing trader, but he is a full-time professional trader. This is a profession. There's no different than being a doctor, lawyer, anything like that. So at first glance, becoming a full-time trader where you're making as much money as you need to live, it doesn't just happen like that. I don't know if there's any weekly newsletter that can just get you there. There's a lot more that goes into it in terms of time, repetition, simulations, data. Paul, any thoughts on that?
Well, yeah. You're not going to learn everything in one day, but I'm explaining what I'm doing in the report. So you're going to pick up on that as you read them, day to day. And pretty soon, after you've read enough, you're going to have a really good idea of what you need to be doing.
Cool. Let's see here. Adam, what do you think of Cowan? Adam, I know this stock Cowan, it doesn't have really any price pattern here. This is one of those stocks that I just kind of stay away from. You're kind of, it's a smaller stock, but it's kind of just a hot, sloppy mess. Just a quick word of what, if I can't figure out in 10 seconds whether I really like something, even 2 seconds, I tend to stay away from it. And this is kind of one of those things where it's like you just.
Yeah, this is one that when I'm going through my scans, I would flip through it. There's no need to trade it. You can find better setups.
There's thousands, right? 8,000 stocks in the market. And on any given day, you literally have to kind of pare down your watch list. So, right, stick with what looks pretty. It's like literally, it's just like looking at like a person. Like, the stock should be easy on your eyes. And, the cleaner it is and the crisper it is, the more reasonable it moves. You won't get the stress levels either. That's a good question. For really busy people, is it imperative to be present at the open of the market when you swing trade?
No, not at all. You're just looking for when your entry points. You've got set entry points. When you have a stock that's on your focus list, something you're really focusing in on, you have an entry that you're looking at and a target that you're looking at. And until that entry is hit, and usually at the open, it's not going to move too much. So whether you trade it at the open, the middle, or end of the day, it really doesn't matter.
How do you manage overnight risk? Like if you just balls deep in some stock, do you take some off the table because you're holding overnight? And
just
too much of your position?
I just let my stop work for me. I try not to worry about it.
Sure. So I mean, usually
you basically set the stop where at that level where you expect to take a small loss, so it won't matter once you get stopped out.
Dun, 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 dun. Let's see. So come on. Boom, 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 boom. Hold on. Let's see. How far in advance do you get out of stock if the earnings are coming? Like, if you're a week at.
I'll go right up to the earnings. As long as you don't hold over, when the earnings is going to hit.
Dun, 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 dun. Victor. Some stocks give preliminary reports 1 or 2 weeks before they even have the earnings. Is this legal? And are there news sources that you can get reliable earnings info from? So, like, where do you get your earnings info from?
I really am not. I'm looking at price and volume. I'm not looking for earnings information.
Like, if you were like, like when you buy a stock, you're holding overnight. You don't want to hold it into earnings.
When do I find out when the earnings are going to happen?
Yeah. What do you use?
Yahoo Finance is good for it. They've got a section in there that.
Yeah.
There's
same thing. Google Finance, Yahoo Finance.
Yeah.
The simplest is sometimes the best ones.
Yeah.
A couple of people have asked about brokers. What's the broker that you use?
I'm using Option House right now just because it's really cheap.
Man, you are so Indian.
Indian. Exactly.
Indian. That's an Indian
get the
thing.
best prices. I know sometimes I've heard that. I guess for day traders, sometimes the entry might not be.
Yeah, for day traders, you can't use retail brokers.
But for a swing trader, I'm just looking for the cheapest option. I've got Telechart for my charting, so I don't care.
Yeah, you have all the tools.
The bells and whistles, I don't care about. I just need to get the good price.
Are you still getting the grandfathered in like the $2.99 per trade?
Oh no, I'm at is it 475?
Yes, 475 now. I used to have the account when it was $2.99, and they were grandfathering people in, and then I was inactive in mine.
Still not using it?
I was inactive in mine, and they just canceled.
Oh, okay.
But you can't for day trading. You can't use retail brokers anymore. It's like even Ameritrade, they just got all this busted for the payment for order flow stuff. They sell up your order flow to all the HFTs, and they're reading your orders before you even get in, before you get filled. So you're losing a nickel, 10 cents on every darn trade, which in swing trades it doesn't matter, but for day trader when you have 3, 4, 5,000 shares of something,
that's
it's
a lot
like
more important. Yeah.
that 10 cents is the ball game. When you do it 10 times a day, it's a whole different ball game.
Yeah.
All right, let's finish this up here. Would you say swing trading is better for those that are generally overthinkers when they day trade? So I get this a lot because a lot of people, my students incredibly. I tell these guys not everybody's going to be a day trader, but doesn't mean you can't be a trader. There's like different types of trading and different instruments, and I've seen a lot of people that are successful in one method that failed in another. And like especially something like a day trading momentum stocks, especially, it's maybe it's different than swing trading. So it's like some people may make it in one and not make it in the other, than vice versa. I have noticed that a good trader in general is a really good trader. Once you get the handle of things, but it might take you a little bit of time to find out what you're good at, and then you get good at it, and then you can move on. That's how I was. I was a crappy day trader. Then I learned swing trading from you, and I became a good swing trader, and that helped me become a good day trader. It's like I made a full circle because I had to learn the rules and the risk management part before I could be a good day trader. Because you have to do all that risk management, but you have to do it on the fly, on an instant basis. And so it's like you have to have your method down. Having practiced, 1,000 swing trades before I tried day trading, was really helpful with just being able to identify things quickly. Paul's asking, do you ever doubt your strategy? How do you handle the downswing?
You just have to. It's worked in the past, and everything. You go through downtrends, but you just kind of have to ride it out. And you go through those times where it gets tough, but eventually it bounces back.
Mr. Turner, how you doing, sir? Paul keeps stating that he follows the money flows. Is that simply observing which sectors are trending up or down? Or is it much more than this, where you're using indicators?
I'm looking at the charts and looking at the patterns in the charts, and I'm also comparing price versus the market from a 30-day standpoint and a 5-day standpoint. So if I'll use India as an example, since we're Indian and India is skyrocketing right now. But 30 days ago, nothing was happening in India, and so the 30-day. I don't know if we're going to get the 30-day numbers here, but I was in one of the reports, but the 30-day on India was flat, and then all of a sudden the number was high the 5-day, so money is flowing in there.
Yep. India, man, that's a big breakout. So they must like this new guy. The Indian market stunk to trade for almost 2 years.
Yeah.
It's been just range bound. Now it's back. Whether this breakout holds, you never know. But it is good to see. It's India, Brazil. These have been like kind of the two that were left for dead last year that seem to be really picking up this year. Just a couple more questions. Do you use a tier system in terms of like your sizing? Do you ever scale in? Like I'm gonna buy half here and half here.
I don't tier in. I basically have a position size. I tier out. I don't tier in.
Yep. Charles. So Charles, this is actually a misnomer. Charles saying I have a small account, so I hope that you don't only swing trade high price stocks. So Charles, it doesn't matter. So it's about percentage return. So say you have you have $1,000 account, you have 10 shares of $100 stock, and it goes up 10%, you make $100. And if you have 1,000 shares of a $1 stock and it goes up 10%, you make $100. So it really doesn't matter. It's about the movement. Dun, 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 dun. Let's go. I think we just have a couple more. Do you swing both ways, short and long? Correct. Vaso, now you've been with me long enough to know that this this is not how it works. Vaso wants to know, do you ever use level 2 data to judge the tape?
I don't.
I don't teach level 2 either. It's fake now these days.
Yeah.
I can go in our hedge fund. I can iceberg in an order and make it look like I have 100,000 shares on the bid. You can do that with anything. It's like, who can if you can't trust it.
Yeah.
Some guy is just coming in. I do the same thing if I'm short the stock. It's like all the offers, like 50,000 share offers coming, and then they pull it, and then you put it back, and then you pull it, and so it looks like there's this huge seller, but it's nothing. It's a little gamesmanship.
Yeah, and I think from a swing trading standpoint, that specific buy or sell order doesn't really matter as it would for a day trader.
Because it's a scalping technique. Level 2 is for scalping. You're trying to read the bid and ask to take 2-3 cents on something. If you're even trying to take 30 cents, it doesn't matter. That's a good question. How do you set your entry and stop on a leveraged ETF if you use a single index to find the setup?
I basically don't worry about where the entry is on the leverage stock because it's going to move with that index anyway. So I look at the stop on the main index, and when that's hit, I'll get out of the leverage stock.
Cool. Brian's mentioning, is there programs, resources for scanning? So we've been talking about Telechar. Another one that I've seen Paul put on his reports that uses some FinViz. That's a personal preference to scanning. you can replicate scans. Like the first scan that Paul taught me was 4% breakouts, and he taught me to IntelliChart. That's something you can replicate in Finviz, CBS Market Watch, because it's just you're literally looking for a volatility of one day. You don't necessarily, need anything fancy all the time, but it does. It's gonna save you a lot of time and headache. IntelliChart is a cool tool. Daniel wants to know: do you ever add to your position if you got some crazy winner?
I don't usually add. I've got the position size I want, and I just stick with that. I'm actually scaling out more than scaling in.
So, Steve's question is: the swing trade service something Paul has provided before to paid subscribers, or is this something brand new? Actually, I met Paul when he had his own service, a trade report service.
Yeah.
When did you start that?
I stopped about three or 4 years ago, but I had a service for about 3 years that did really well, and I've learned from that, made some tweaks to it, and basically continuing that now.
So Ben wants to know: any time you ever use a shorter MA, like an 8?
No, I stick with 20, 50, and 200.
Wes, would you guys ever do a combo package of chat rooms and services? We'll kick that one around. We've been just trying to get things up and going. We haven't thought that deep into the sales cycles of combos and stuff like that. But we'll come up with something. Jim, will you be able to use our ClickFund account to swing trade? Right now, I'm only allowing the profitable traders to hold swings with full account or margin or anything like that. If you can't make money trading, you shouldn't be holding overnight on leverage and stuff like that. You gotta make your move. See, the ClickFund, Paul, our hedge fund, it's all funded with my capital. So it's like, if a losing trader wants to hold overnight, I'm kind of always like, because it's all funded by me. So it's like, they're trading my capital.
So other people are trading your money.
Yeah, so you have to have much tighter risk parameters because it's not their money. It's like, this is the fund's money. And then what we do is we reward the trader. So it's like, if you're profitable after 2 weeks, we give you more capital to trade with, a little bit more buying power, a little bit more risk. Then you can hold overnight, if you're profitable after a month. So we scale them up to the traders they need to be. Start them small, and then the whole point is to build them up like piece by piece. And then right over the course of 2-3 months, hopefully, they can handle $100,000 account.
Wow.
But it takes a long time to get there, right? You can't just go in and trade $100,000 account. It doesn't work like that.
Yeah.
Cindy, a lot of trading firms limit buying power for stocks held overnight. If you have a small account, what are some good firms to trade with? Cindy, that's not true. If you're in Ameritrade or Interactive Brokers or options houses, if you have a margin account, your margin is your margin. They don't necessarily say, you can't hold overnight. You have a certain amount of overnight buying power. On average, how many trades you do a month? We've gone over that. Do you use mental stops or physical stops?
Usually I have a physical stop in there. Just because you're not always watching it, and you've got to have it in place.
Yep.
If I'm going to be watching it closely, I'll put a mental stop in.
Monday is mentioning LBS as a head and shoulders. Do you see this going up in the first resistance? Monday, my man. This one's a little bit more tricky because the volume pattern is off.
Okay, so there's a head and shoulders pattern. I would probably hold off on going long here and wait for the bounce and then short it because the volume pattern is negative.
Yeah, and this one is actually very strong distribution.
Yeah.
I mean,
I do expect a bounce, but rather than play it long, I'd wait for a short opportunity.
Dan C, there will be swing trades for shorts. Yeah. Hey, I totally understand. You gotta put the kids to bed. These things go for a while sometimes. Paul, did it take you guys long to make a living out of trading? Paul, I sucked as a trader before I met Paul for like 5 years. Like I was awful. Not awful. I was hot and then cold and hot and cold. So the overall results were awesome. But I was going for months where I was hot, but that was like gambler hot. You know.
So how long after we were together did you break out full time?
6 months.
Oh wow.
Because I had a lot of I had the experience and I knew how to pick stocks. I just didn't know how to trade.
Yeah.
You know, so like I knew things, but I also didn't have anything in a system. It's like I've read hundreds of trading books. I feel like, you know, so I had all of this knowledge, but it wasn't like pieced together. Like, you know, you're like when you showed me the stuff, it was like, all right, at night first you run your 4% breakout scan, then you do this, you know, and then when you look at a chart, price pattern, volume, stochastics, moving averages. You know, so it's like very easy for me to kind of start piecing together like a recipe. That's what I needed, was this kind of structure around what I knew, because I had no structure, so I was just taking a guess. Like this guy said it's good, and Jim Cramer said this was good, and Stock B says this is good. You know, and you're in all these different websites and different businesses trying to figure it out, and it's like you're listening to everybody without really having your own system. And it was, once I had it, I was good. It was just I needed it. I needed the structure of like, here, this is a scan. This is when you run it, and this is what you look for. You know, I thought that was a game changer.
For me, it took about 5 or 6 years, and I never added to my account. I basically just building it until it got to a point where I felt comfortable that I could trade it full time. I probably could have done it earlier, but I just wanted to make sure I had enough of a safety net there.
Bob, check out our blog if you want to look at some of the current trades that we've been trading. We went over them today, the GDP and stuff like that. But check out the blog. There's a whole bunch of them. Peter, can we get a free watch list for swing trades? We'll post them once in a while, but you know, the watch list it's different than my watch list where I do like a 2-minute video of like 5 stocks. You know, this is a little bit more in depth. You know, there'll be samples out there, but for the most part, these are going to be in the service. Hey, Septine, the Trading Academy does work for international customers. You can email us and I'll walk you through it. You know, that's for the hedge fund. You know, I can walk you through it if if you're international. Dun, 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 dun. Richard, will Paul be able for questions like you are? Richard, one of the things is I probably go above and beyond sitting at this computer. Paul will be able to take questions, but it's not going to be one of those things where you can call him at 2 in the morning and stuff like that, like you guys with me. I'm always up, and frankly, I'm always on the phone. So Richard, these guys, I know these guys for so long that they all bust me all the time.
You know, if you've got a question, you can shoot us an email and I'll answer it.
Hey Doug, email this email for the yearly to swing@bullson.ws, or you know my email, Doug. You can hit me up anytime you want. Rob, what is the percentage of successful trades, for example, last 2 weeks?
The percentage of successful trades?
Yep.
Well, in the report, I think we did in the last 35 trades, and only one was stopped out. So that would be 80% for the last 2 weeks.
So that's not bad with the market being up and down. Actually, market being up and down is a good thing for trading. Kevin, will you give us a market target and direction in the reports? This would help greatly color the underlying individual setups. Yes, that actually does happen in the reports. Wahid, How do you identify accumulation versus distribution? Volume bars. Check the volume bars, right? If your green bars are bigger than the red bars, accumulation, and vice versa. Don't make it too complicated. One thing Paul taught me was if I can't figure it out, I can use something like OBV to kind of add confirmation to what my eyes are seeing. Mohammed, are you going to add swing trade alerts via text? We will over the coming weeks, so we got to get up to it. Randy, the swing trade service is currently available, and you can sign up for it. It's on our pricing page, and we got a free trial going too. So you can sign up for it ASAP. Chris, I am not holding SLCA anymore. My hold times are just. I took a few bucks out of it, and I was not able. The stock is a grinder, so this was the problem with this type of swing trade for me is that it takes many days to make its move. I am not a many days type of guy anymore. So SLCA. See this thing? Its range is like it's so slow. So you can get this monster move, but because it moves so darn slow, it's like once I got overbought stochastics and it was hitting the Bollinger around here, I was kind of out.
So this is the one we talked about before.
Yeah. Well, it's hard. This was an all-time high, so it's like, once I got overbought stochastics and we were hitting the Bollinger, I was like already scaling out of it and just kind of, I was using my 20-day moving average as a guide, but even then, we were getting really extended from the 20s, so at this point I was kind of bailing out of this stuff. Let's see, I think we pretty much it. Oh. Dun, 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 dun. In order to miss a good price, you say buy price point. So it's like, do you ever use buy stops or buy price points to kind of get into something, or are you gonna be eyeballing this?
What for like entries when you can't be there? Yeah, for a part-time trader, buy limits where you set a price. It can be a little risky at times if you don't know if you're not there and you don't know if there's a big move, but especially also for if I'm anticipating a breakout, I'll set the buy entry also.
Tawan, is there a difference in indicators used for swings versus day trades? Yes, there are. What was the broker Paul said he uses? Options house. Let me see. I think we're pretty much ready to roll.
Okay, so I'll have a trade report out either we ran a little long here, so either late tonight or pre-market tomorrow, but generally they'll come out in the evenings.
And guys, if we didn't get to your question, there was 1,000 people actually in this webinar on the dot, so we may have missed a few questions and things like that. If you guys, Jerry, if for the yearly, just email us and we'll set it up because we don't have it on the site. Just email it and we'll set it up, or you can email me personally and I'll get that thing done. And guys, email us if we missed a question or something like that. That's totally cool. You can email me and I'll make sure to point you the right way. We're getting this thing up and running as of right now. For the people that sign up over the next 1 week, we'll do a yearly subscription for $6.99. Send me an email and we will get that done for you manually, and we'll have another goodie for you when you send us the email. So Paul, thank you. I know this thing ran a little bit late, but
no problem.
When you have so many people in the webinar, there's going to be questions.
Yeah. So there'll be a report out. I'll get started on it right now.
All right, rock and roll, guys. See you all tomorrow. Get some sleep. Adios, muchachos. Hey, good job, Paul. Your first one.
Is it still on right now?
Yep.
Okay. Well, it did run long, but it was great. It was great.
Alright, take care, man. Get some sleep, bud.
Alrighty.
You're at 7 o'clock probably over there.
8 o'clock.
Well, get some sleep, my man. Alright, take care, guys.
Alright.